Okay, I hope we're streaming now. Every freaking time I do that, I think we're okay now. Whenever I have to shut OBS off after I've already scheduled a broadcast, it gets its knickers in a knot, and that's the end of it. Anyway, welcome to risk neutral trading. It's my virtual trading journal. The point of this is that it is not for financial or trade advice, but it is. I believe journaling is important, and I don't multitask well, and I stumbled upon this idea, which I find very, very helpful, even better than a regular journal for me. Everything on my screens is captured in the video, obviously. My voice over here gives insight as to what I'm thinking at the minute. So when I review the stream, I can both see and hear what I was thinking. Pretty close. And that's a big help. And I don't have to divert my focus from the markets for screen snapping and typing and doing all those journaling kind of things that are important. The stream starts every morning at 8 o'clock, every trading day at 8 o'clock, Central Standard Time. All the times on my screens and that I refer to are Central Standard. You notice that I stream the entire monitors, not just the application, so you can see any program that I have open at the bottom here, the clock in hours, minutes, and seconds, and the date, which ties back to both Bookmap and IRT. The idea of this is complete and full transparency and accountability. That's also why the stream lasts for a minimum of 7 hours every day, because I start at 8 o'clock in the morning and it streams continuously through 1500 in the afternoon. And now that I've had all this kerfuffle getting going, I'm going to try to get up to speed time-wise here, because I'm behind the curve a bit already as far as the timeline goes. The reports this morning, let's get right into that, were kind of disappointing but expected. This is my IRT. Jesus Christ. This is investing.com, which is my older news source and the one I prefer to refer to for making screen snaps to post somewhere, because it's real clean presentation, has the current time in whatever, time zone, etc. So you can filter this to wherever part of the world you are, your time zone, and what reports or countries you're interested in. Doesn't have to be the U.S., doesn't have to be the U.S. reports, anything. It also has a real good earnings. You can look out for the week on your numbers. You can, do some planning. And this is completely free. It's called investing.com. We had non-farm tentatively scheduled today, but because the children are still busy throwing their toys out of the cot in D.C. down there, they haven't gotten that together yet. I can think of several people that I would put at the top of the list of federal people that are going to get fired. I can tell you that. I would start with Congress, and then move to the Senate, and no party affiliation, just clean house. That I think that'd be a hell of a good start. Anyway, so that's where we are. I would like to also point out that earnings season starts again next week. So there we go. Another news source that I use now, relatively newer, is Financial Juice, also the free version. You can pay for both of these if you want to, got money burning a hole in your pocket after you've sent me, a big donation. But seriously, this is free, the free version, and there is a similar calendar or docket available on the left side here. I just don't like the presentation as well for screen snapping, etc. Okay, They do a little better job of picking up these random risks that we don't normally have scheduled. Like they're always going to have University of Michigan and various things, like both of them. But here's something that was scheduled just recently. Apparently, Trump's going to talk some more at 1600. Fortunately, that's after our market session, so that's not a risk to us for this upcoming auction yet. They also have over here on the right a bit more of a squawk box feel, which works pretty well. So that is it for the news and the reports and how I do them. This is IRT, which is my charting package. These are the ES Mini and Q Mini, the ES Mini, my high time frame, and the ES Mini market profile. I also plot and track the same configuration for the micros because I push session prices and things to turn off those naked volume points of control to a lot of people. So, and some people trade the micros and some trade the minis. Here is our overnight. This is the full session chart at this time. So here is yesterday's RTH session. And here we are with the overnight so far. What is that? Well, there's our open. If you had to, well, conveniently, this green previous IB line here, the green, bright green, pretty much highlights the close. There's the open right down there. So, you know, pretty close to the close or to the open. And where is our inventory pretty much all night? Well, it's pretty much all above that line, isn't it? So the inventory is, I would guess, at least 95% long. Balanced rotationally, but long inventory compared to our open. Makes sense. This is a B-shaped profile, which is long liquidation. So these guys took some profit down here. I would imagine this morning, today, we have the Michigan number coming up, which can definitely be a market mover. So be aware of that at 9 o'clock. But I believe we're going to have probably a bit of responsive selling to take some profit. Remember, this is Friday. We don't, right now with the potential critical risk at all times now, who in the hell wants to be long or short or in a position over the weekend when something could happen that would seriously impact the market, the auction, etc. So I'll be looking for some responsive selling to take profit. Maybe down into this area, and then probably rotational. If you look at how have these past days played out? Well, there's a sell, there's a buy, there's a big sell-off, there's a big buy. Yesterday's big sell-off. Now, what does that mean? To me, it means that there is absolutely no regard for the value of the S&P. These guys are just trading this, man. They are grinding up retail and they're making money trading the hell out of the market. We are traders. That's what they're doing. Big sell-off Wednesday, Tuesday, Wednesday, Thursday, down, up. The market goes down to go up, it goes up to go down, and down to go up, So there you go. And this is the market profile chart. I would say that we're about 130,000 contracts at this point overnight. Let's see what our volume is. Well, we're at 109% volume for this moment in time. Looking back at the average, and our average shoe range is down at 2.5 points per 5-minute bar. So This is my higher time frame, which is, I call them, we refer to as micro composite, and it's real simple. Again, like everything here, it's data driven, price driven, not magic. You don't need to have a pointy wizard hat or a magic wand. You just need to have common sense and look at the data. RTH session only. 1 day candlesticks. Wherever price overlaps, I draw a volume profile around it, and that delineates the micro composite chart. What have we been doing for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days? We've been going up, 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 up. And these are continual. From here on, these are all-time highs. You know, pretty ridiculous, but that's what it is. These red and green lines here are the high and low volume nodes based on this market profile, on this volume profile in this micro composite, and those values push to bookmap. It also generates a micro composite VPOC, which I enter manually in bookmap, which brings me to bookmap. Here is the dome. That ought to be self-explanatory. This is my micro composite high time frame chart values that I enter manually. So let's look down here, and there's the previous all-time high that was put in on the 7th in the RTH session. Then we had an ETH, and then we jumped around, and now we got a new one up here again in the RTH yesterday. So I'm going to consider this to be stale. The way I do these workflows is when it's a stale value that's already been revisited, I change the text to black. And then over the weekend or at night or whatever, when I remember it, I take them off. And here's the POC, micro composite. Here's a naked volume point of control from needs to be removed because that's already been revisited. We have so there you are. And here are the high and low volume nodes. This is the full session volume profile. Started at 1700 last night. We'll plot through 1600 today. Central Standard Time. This is the RTH volume profile from yesterday, which will reset this morning at 8:30. An important column for me, this is my notes column. The first thing I do every morning is determine where I believe our open type will be for the day. There are only 4, and they only have 2 criteria, which is real handy. And how we determine the open is, imagine that our RTH session opened right here, right now. Price is at 84.5. How does that compare to the previous RTH close? We're higher than the close. How does it compare to the previous RTH range? We're in range. So we're higher in range. What a coincidence. The same as yesterday, the same as the day before. That's not always the case, but that's the way it is. That will dictate which statistics I use to input here adjacent to their related price level. Next thing so what I would do normally is I would change this column title. I'm not going to today because it's going to be the same. The reason I do that is if I look at any screen snap or the stream, and instantly I can tell what the open type was and what happened through the overnight to now, right? It gives you a lot of information, a lot of data. Next thing I do, and these are the statistics which I entered yesterday at this time, not change through the day. Then I clear the notes, and now we're going to start over. These are the session prices pushed from IRT to bookmap. And here's how I like to have the price index in 1 point increments, and I keep the entire session in view. And I know that by this blue line over here, which it's nothing more magical than a blue vertical line, or a vertical line in Bookmap, and I slap that on the opening print of each session. Therefore, I can glance left, and I know that I've got the full session in view over here, and that's real important for context. Look at overnight. What'd we do? We went a whole lot of no place. We traded the hell out of things. Volume is up, as we already looked. We already looked at that. So what happened? Well, they traded the hell out of things, and it's speculation. They're picking each other's pockets. And that's trading. So let's get to the statistics before I get carried away here. We're going to open, once again, higher in range, and the way the statistics work is as follows. This study looks back at 2,000 trading days, the most recent 2,000 trading days. Of these 2,000 trading days, we opened higher in range 608 of those days. Of these 608 days, price revisited the overnight volume point of control 507 times in the RTH session for 83.4%. Overnight volume point of control, 83.4. Wow, pretty tough, huh? And the next thing I'll do is go to just straight down the list. Now, IRT conveniently highlights the correct open type in case in case that's not really clear. Unfortunately, this is the same open as we've had for the last 2 days in a row. So there's the POC. What's the next one? It's the overnight mid. It's 76.8. Overnight mid. 76.8. Boop. And that's all we do. Down we go. Overnight high is 75.3. Overnight low, well, we've got some others. Previous close is 70.4. I like that one a lot. Now, because I fluffled around with getting the stream going this morning, I'm going to jump over to my next order of business, which is TLab Snap. And that is something I do every day just to out of gratitude and kind of, camaraderie, I guess you could call it. I do this snap I don't know what the hell is going on here, but I'm not liking it much. To the Traders Lab. And what, you ask, is the Traders Lab? Well, it is a Bookmap Discord chat room called the Traders Lab. And it is, it was started and continues to be run by a fellow named Tom B. And I do 2 posts in there now. I used to contribute a lot, but I've backed off because there's a bunch of new people that talk a lot. A bunch of new experts, you know how it goes. So I do this snap every day at about 8:20, and it's to give folks in there that don't have the same kind of charting as much data as they might want before they open. And then I'll get back to the statistics here as I continue to talk. So Tom is reportedly, or he doesn't trade live and he doesn't call trades, and it's just the Discord room, except for a brief period, I think from 10:30 to 12 maybe, when he does a live stream. But it's all rear view mirror stuff. He starts at the beginning of the session, or actually a little bit into the overnight, and then, narrates the price action. Well, that's fine. But that's rear view mirror trading, kind of. So, but the important thing about about the Traders Lab is, I believe Tom is the real deal. He's reportedly been trading for 46 plus years. He, IB high 68.8. This is important, and I want to mark this down. Oops, that's the IB low. And I want to show you this, how I do this. 61.7 is the IB low right here, right? 61.7. And it's IB low. And the reason I do that, sorry to break away from the TLab thing, but the minute we open, remember the definition of the initial balance. They are just the high and the low of the first 1 hour of the day, of the trading session, RTH, that's all. So this is going to move to wherever the low of our open is. Which brings me to the next point that I think I glazed over real quick. I'm out of control this morning. There is nothing magical or mysterious about any of the pricing. You notice there's no indicator on my book map or my IRT. There is a POC for the full session, a POC for the full session, a POC for the RTH. The difference is the color. You see the brighter yellow, the more muted yellow, that's the difference. POC is nothing more complicated than it marks the price at which the most contracts have traded so far in the session. That's exactly, absolutely all it is. So around 50, whatever this is here, let's call it 56.89. The minute one of these prices goes to 56 or 50, well, now we got 57.90. The minute one of these prices goes to 5800 or whatever, you know, one contract more, that line's going to move there. That's all there is to it. As I said, the IB high and low are a little bit confusing sometimes because of the name. IB stands for initial balance. It is an old market profile term. What those two levels actually represent are the high and low of the first 1 hour of the RTH trading session. So when we open, this will go to the low and it'll move down with price should price go down. Then at the end of 1 hour, it won't move anymore. And the statistic associated with the initial balance becomes active. This is the previous POC. At the close of the RTH session yesterday. So that is a naked volume point of control from yesterday. That is the most recent naked volume point of control from yesterday. And that is whatever yesterday was, 091025. Okay, and if we take that out, boom, we do. That's all there is to it. I try to identify levels and prices that may have some impact. Or let me rephrase that. Some levels or prices to which the price may react when it approaches or reaches there. You know, you see what happened here at the previous IB low. The previous IB low. We came down here and bounced back up. Came up here to the developing value area high and the overnight or the previous POC, and we bounced down. That simple. We reacted to it. That's how it works. Back to the TLab quickly then. The thing about it is it's absolutely free, and you would never be solicited for anything. Nothing is for sale. So I don't recommend any other bookmap Discord sites because I haven't been there. I have visited 2 others, and they were more typical. About the third word out of the guy's mouth was trying to sell you something. Previous high is 56.9. I'm still back to doing this. I'm all discombobulated this morning, sorry. Previous low. How low can you go? 35.2. Ooh, baby, huh? Now, you need to kind of use your head about stuff like how could we get to 70.4% probability and not already go through 61.7? Well, we can't. That's why it's real important to understand that these are probabilities. These are the number or the percentage of time that price revisited this particular level, looking back at a data set of 2,000 trading days and a subset where we opened higher in range, period. They're not hard and fast lines in the sand. They're not guaranteed, targets. That would be cool. If you figure that out, don't tell anybody. Just immediately give me a call. Because, that's like the ATM in your basement kind of deal. All right, we're going to open here in 30 seconds. So I am way behind something, I'm pretty sure. Oh, yes. One of the things I haven't done yet, which I will do right after the open, is enable Bookmap to be able to trade, because right now we cannot. The trade control panel is not active and we can't trade at this moment. But I don't want to detract from the open and what I have to do associated with that. There's our reset a few seconds ahead. Okay, so what? That's all right. And let's look at our first migrating VPOC. All that there. I will now change my IRT charting from full session to the day session only. Like this right there. We have a little bit of a lag over here with the data choke. There we go. And we'll save that bad boy. And I'll do the same for the micros. And I'll explain to you why I do this in a minute. Remember, I'm old. The multitask guy, maybe not. Okay. The reason I do that is as follows. Now, here is the previous RTH session, and here's our open. And I know something I didn't do last night, which is edit the expected moves. I'll talk about that in a minute. I just happened to notice that. I was busy with some family stuff. I mentioned earlier that I push and happily share these price session prices live in real time from 1700 on Sunday night until 1600 today. And anybody, if you can use them, let me know. I'm happy to share them with you. Thumbs up, subscribe, drop something in the chat that you'd like, and I'll hook you up with these things. It comes as it's a link to a Google page, which is gives you a continually updating live CSV file. Then you can put that URL or that link in your cloud notes or in these indicators over here, or whatever program you're using, and you'll have these levels live and these same colors and everything else. I'll be right back. All right. So here's our open. what I'm going to do now is put this secret. Turn away from your monitor because I don't want you to know this top secret thing I'm doing here. Does that sound like an internet guru? I should put that on Twitter, I guess, or whatever you call it. No, I don't use any of that social media crap. So here's my session start marker, and I will ensure through the day that I keep this line in view on the left side of my chart, and that lets me know that I have the entire session plotted here, and I will have a firm understanding about the context. Okay, next thing we need to do here, probably if you're going to be a trader, is trade, right? So with Bookmap, what you have to do is activate the trade control panel. Right there. I want to change this down here. 31. So here's the trade control panel. Now what you do is select the way you're going to interact with the application of Bookmap to trade with your mouse. If you choose the chart, the only place you can trade with your mouse is the active data column. You can click hell out of things over here or anywhere else, won't matter. If you choose the dome, then the only place you can trade with your dome is the dome column, and you can click anywhere on the chart, including the active data column, nothing going to happen. Or both, which is obviously both. Now, the next thing I do, which is where my whole risk neutral idea comes in, is I use multi-brackets. And that is how I implement the risk neutral functionality or trade management into my trading. This is the smallest risk neutral package you can use because you must use an even number of contracts. So there you are. And there's the contract. There's the size. 2 lots. You then select a stop loss for the entire package, and you enter it in this particular multi-brackets, you enter it in ticks. Or I do, because that's how I think. Now, how do you come up with your stop loss for the package? The first absolute criteria that you need to use is your account risk tolerance and parameters. You know, if you have a daily loss limit of $1,000 and you're going to trade 2 accounts, you better not have this 36 ticks 24 ticks or 36 ticks, because that's going to, one stop loss is going to be over your daily loss limit, for example. Or if you're using you're trading your own money in a brokerage account, you don't want to trade more than about somewhere between 2 to 3% of your account on any one trade. Remember, this is 2 lots. So instead of 12 ticks, it would be a total stop loss of 24 ticks because you have 2 contracts. Once you've established this, the first risk neutral scale is automatic because it is for half of the package, in this case 1 contract, and for the same number of ticks positively as the stop is negative. Then you have a runner for the balance. In my case, I use 48 ticks. 4 lots. 4 lots high volatility. You know, you can build these till the cows come home. Doesn't matter. And the next thing that I do here is I select the multi-trading thing, which is important for me. And what that means is when I take a trade here, it's automatically exactly whatever I've done is pushed to 4 other accounts. So let me continue on. Now that I have gotten my multi-brackets all set up, I don't need the functionality of the trade control panel anymore for stops or, brackets or any of that stuff. So I confirm the package size. And you notice that I have these metrics up here, same as here. So I can click again the button. It stays green and the padlock stays unlocked, meaning that we can trade. I can trade, but I get the real estate back on my screen. I have the same metrics here, and I have cancel all and close all. Boop. All you need. Now I'm set to go. We've opened. We're trading higher. So much for my take profit with responsive selling. That didn't come off very well, did it? And we're getting VPOC migrations higher here, which is, remember, this is just the open, but it's price action so far. We've been open less than 10 minutes. Yeah. Now, here's something that I think will happen soon. I talk about this every day. This is an all-time high put in yesterday's ETH session. The RTH traders hate for the ETH group to have any kind of levels. We got within 2 ticks or whatever, a couple of points of it yesterday. I would not be at all surprised, and I make the prediction here and now that before the middle of next week, this will be taken out, and I would not be surprised if it were today. It may only be a couple of points, but, you know, they're happy. And there's maybe, who knows why, but, you know, that's that. So we're taking out those statistics. We've taken out the overnight volume point of control, I think. Here's our IB high. Remember, it's just the high or low of the first 1 hour of the trading session here. So, boom, up it goes. The low will go down. You can see the little green line lurking under here because we got them piled up. We've got the overnight VPOC. We've got the overnight VWAP. We've got whatever that yellow guy is. No, it is... the IB low, you know, they're all in a stack down here. Correctly marking the low of this current trading session. And right now we are 6802 handle to 74. So what are we? We're about 8 handles wide or something. I'm like... So now where the hell am I? The open isn't exactly right. I think it's like 28. Well, what is it? It's 38 now. 42. Whatever. When this last OBS update happened a couple weekends ago, it broke my... I'm not a big stream guy or any of those things, is probably obvious, and I don't use a whole bunch of plugins or tools. I'm one of those... I'm an old cowboy from Montana. This is the truth. And I am a firm... if it ain't broke, don't fix it guy, right? I use OBS for this stream and I love it. It's great. It's a phenomenal product and it's free, which is just great. I mean, that's even more amazing. And I don't use a whole bunch of plugins. I'm not a stream guy or a gamer or a Twitcher or any of that kind of thing. But there's one plugin that I did use, which was the chapter markers. And at the last update, it broke. And so I'm trying to keep the chapters up because that's very important to me. And I suppose anybody else that reviews the stream. I mean, who's going to sit and listen to 7 hours of this stream? If you want to see what the trades were, what I said at the open, whatever it is, and I'm the same way. I stand here from a little before 6 in the morning until around 2200 at night. These are 2 stand-up desks. I don't have a chair in a place, so it's great for me. And one of the conveniences of streaming this to YouTube, I can review it on any device, in addition to the fact that it further adds to the transparency and the accountability, but I'm not going to sit and listen to 5 or 7 hours of this. I'm going to want to skip to where I want to skip to, and that's what those time stamps, chapter markers are about. That was a real handy tool, and the young fella hasn't gotten it updated yet. Some fella from England. Yeah, So here we go. Thanks for visiting the stream. Smack a thumbs up. Subscribe would be super. Drop something in the chat. Where are you? Where are you from? What do you think? How do you trade? What do you trade? Who's on third? Okay, let's look back here at my thing. I don't know if I finished the thought on the multi-account trading, maybe, but the reason that I do that is this is a top step evaluation account, this lead one, and there are 4 others behind it, and that's where each trade is copied. So in other words, when I take a loss here, I've taken 5 losses. If I take a stops, if I take a profit, 2 profits, I've taken 5 of them. And I didn't think, I thought originally when I heard about the functionality, I thought, what a crock of crap. And then I got to thinking about it, and somebody said, what are you, stupid? You can, if you take all 5 of those to the XFA, and then you can get a payout on all 5 accounts. How dumb is that? Not to say, okay, that's like, I don't want your free money. Thank you very much. How long that'll last, I got no idea. And once you go live, once you move to the live account, it's one account is normal. But it's called, you can take advantage of it to build up the account size, which moves across to the live account. And the idea here is that I would have a fully recorded 0 to hero process from Combine or whatever, an evaluation through live. And there you are. That's the reason for the copy thing. It doesn't work on any live account. I don't know of any brokerage. I'm not saying I know this. I'm saying I don't know this. For example, if I have 2 brokerage accounts, can I copy trade from one brokerage account to the other? I am 99% sure the answer to that would be no, but not 100%. It's like the statistics we use in trading. If it ain't 100%, there's still a possibility that it could be. And now, where are we? We've got news at the top of the hour. The Michigan number, that can be a market mover. So keep your powder dry would be my explanation there, or my suggestion. 11 minutes. Here's an interesting fact for you. The data of government closures or government shutdowns, looking back at the last 8 or 10 or whatever it is, the S&P went up on during each and every one of the government shutdowns. Stocks went up, rose, increased, whatever you want to call it, up and to the right. Interesting. A lot of theories about that. One of which is that there are no numbers out like non-farm payroll to throw a blanket on the party, you know. So they just rock and roll. Here we go into that 9 o'clock number here pretty quick. Look at them pulling back. The book ought to thin out, but I don't know in this shutdown mode whether that's going to be the case or not. You should see these numbers disappear into the low perhaps single digits. Yeah. I wish I could there's some things about Bookmap I'd like to have fixed, but I wish I could just set, this damn thing to do what I want it to do. I got to hunt around and scroll it up and scroll it back, and it's all kinds of, maybe there's a way. If you know that way, slap it in the chat, please. I want to use one increment, right? And I can't get this. There we go. Jesus. 1 point, I should say. Well, we've taken out No, we haven't yet taken out the overnight volume point of control. So that 83.4% probability is still living down there, followed in hot pursuit by the 76.8 and then 70.4. And don't forget Mr. Settlement down there. Do I suspect that we'll go down there and do that? Yep. And here comes some of that responsive selling or profit taking, I guess. Keep your powder dry, heads up. Michigan number. And I suppose the market might be grasping for any data point they can get. Michigan is always a substantial number and potential market mover. So it's Michigan consumer, University of Michigan consumer confidence. What else is going on here now? Seven minutes. Enough time to reload my teacup. What happened? Oh, I'm pretty quick. So we're just in the hold here. The book is not thinning out at all, so that's kind of interesting. Switch the lighting up a little bit. I got some over screen, over monitor lighting that's really been a big help to my old tired eyes. I heartily recommend it. Called Quntis, Quntis. Screen linear, they're called. They are Bluetooth controlled by some little pucks on your desk, and they clip without any kind of mounting nonsense to the top of your monitors. They also provide backlighting behind them. Really a handy eye. Rod is the guy who suggested them, so kudos to Rod. All right. Couple minutes for the Michigan number. These are the naked volume points of control, which I keep shut off because there are just a lot of them. Obviously, they're all below us because we're at all-time highs. Here's our yesterday's naked volume point of control at 79. Jump over here to book map, and isn't it wonderful when a plan comes together right there, huh? Boy. I don't see the, well, it's pretty early. Now you can see how the algo's been shut off. You see how all the liquidity that was building up over here has gone black? And the book got it thin more as well. That's a typical behavior ahead of the number. All right. Now, look how black it got. Now we've dropped down to the teens, huh? And this is Michigan, right? The Michigan number, but it's all we've got. So I suppose hats are hanging on this, you know? There's a lot of algos and a lot of traders that trade numbers. That's how they make their living. 30 seconds. I'm streaming. I'm on the right thing. Yep. Okay. It should be pretty obvious I'm not a professional influencer, shall we say. I'm almost proud of that. I think it's just 4 seconds. There goes the book down to the single digits. You see that? Sevens and there we go. 0 reaction. Funny, huh? Ooh. What happened on the number? They're down. So consumer sentiment. Previous was 55.1. Forecast was 54.1, and we came in at 55. Let's see what Financial US has to say here. There you go. Same story. And there's how they put the Bitcoin pop on some stupid thing. I don't know what. How long that scam will be allowed to exist is, I guess it'll go for a long time, given the current climate in Washington. They're making money off of this. Something that, if you're, if you're aware in trading and you understand the concept of why it's important to keep track of numbers and report releases, it all boils back to the very basic tenet that your job, your responsibility, your prime directive, if you want to be in Star Wars, as a trader, is to preserve and grow by, compounding via the law of large numbers, your account. And the most important factor of that, or way to do that, is risk management. So, why is it important to know about numbers? How are you going to manage your risk? Now, this is a relatively benign number. That's why everybody puts such a big importance on non-farm payroll. It's the biggest number in the U.S. economic data that comes out on a recurring basis. It's the first Friday of every month at 7:30 in the morning. Everybody knows that. Anybody with a brain is flat before 7:30 the first Friday of every month, because there can be a huge movement and you cannot control if you want to be a gambler and go, boy, I bet it's going up, and knock yourself out. But that's not trading. And that's not applying proper risk management and the whole philosophy of approaching trading as a business rather than a video game or gambling. And there's nothing wrong with video gaming or gambling. I'm just saying that's not what I do. So there you go. One thing about the Michigan number to know about, just as a FYI or an interesting tidbit, you can pay for the whisper number. You could pay a subscription fee, and you get the number a few seconds ahead of the release. Typical, huh? Okay. Well, that was a much to do about nothing, kind of. Here's a consumer sentiment. This is the Michigan number. Now, what has consumer sentiment been doing? What is the context of consumer sentiment? This is based on stock holdings. Well, this is a real telling metric right here. Which section of the sector of the economy and the population do you suppose are consumers with large stock holdings? Maybe that select few in the those who have the wealth. And who do you suppose would be the non-stockholders? Everybody else. The wealth divide and the inequity here is getting just crazy. Something's going to pop. It's like it ain't going to go on forever. If I think the 90-something% of the wealth is controlled by less than 2 or 3% of the population. How long do you suppose that's going to go on? I suppose that's where, that's where uprising stuff come from, I guess. I don't know. I mean, I never thought any of that's what happened in my lifetime, but there you go. There you go. So the Michigan 1-year inflation premium, or preliminary, I should say, 4.6, down from 4.7. I'm not sure what the hell that means, to be honest with you. And here's the number everybody else was looking at over here. And then we got Canadian stuff going on. Their unemployment change has gotten better. Good for them. That's great. What's going on over here? Got it. I don't want this crap going on, whatever that was. And we have a VPOC migration lower. Oh boy, oh boy, oh boy. Let's trade. These VPOC flags are not nearly as important as they used to be in my day-to-day workflow, because previously I would try to be screwed in, right? I would try to be looking around somewhere around 5 minutes on the time frame down here. That's not 5 minutes, but okay. There we go. There's 5 minutes. So where this yellow line continues to plot all day, and remember, it's just the marker of the POC. And remember that the POC is nothing more complicated than the price at which the most contracts have traded so far in this current session, 51.97. The very split second that one of these levels up here, price levels up or down, trades 5,198 contracts, this yellow line's going to move there. It's that simple. That's exactly what happened from 48.63 to 41.97. This little hiccup right over there. It's real easy, man. This should not be anything daunting or complicated or confusing. The only lines on my charts and levels that are kind of mysterious, and I guess you could call them indicators because they're calculated, are the VWAPs, which is the volume weighted average price. And if you Google it, you'll see how simple that is. Instead of the mid, which is here, or the POC, which is down here, based on volume, this is the VWAP, or the average price based on volume weighted. So yeah, there you go. And, as we already have discussed a whole lot, the initial balance numbers, this thing will keep going up with price if it ever comes back up here, and the low will keep going down with price until 9:30, at which point they won't move anymore, at which point the IB statistic will become active, And those are the trades that I'm vetting at this moment. So there we go. I'm not trying to infer or imply that trading is easy, but it's a skill that you can learn. And it's not magic or mystical or daunting. It's if you approach trading based on probabilities and statistics and get them on your side and apply the law of, and lean on the law of large numbers, which I'll talk about after a little bit, you can be consistently profitable and successful. Simple. If you approach it like a dickhead and you can't stop clicking the mouse and I've got a hunch or a feeling that we're going to do this, and stop trying to pick the bottom or pick the top, you're probably going to get your butt handed to you and get, run over. Probably. That's what seems to happen. That's why there's 99% of the traders, or whatever the hell the number is now, fail. Because 99% of them think they're going to come up with some wizardry that's going to, or they listen to some dork on the internet or whatever Twitter is called nowadays. Stupid. Where are we and what are we doing? Well, are we going to get some of my foretold come on. Blue Boy's being bashful today. There we go. My workflow again is for the new folks dropping by. This blue line, I slap on the opening print of each session. And then I can it's just a visual clue for me, or cue. When I glance left, if I see that blue line, I know I have the entire session so far in view on the chart. Really nothing more to it than that. Oh, what's happened? Well, isn't that amazing? That 83% probability was just achieved. Huh? Isn't that funny how that happens? Maybe not. Oh, now what's going on here? So we're 18 after. Remember that the initial balance statistic is not even a thing until 9:30. And I can prove it. So just to look back quickly, here's my backtesting tab and setup. Get this geared up for today. This is yesterday. Here's today. RTH session only. These are the backtest rules for my backtesting, which we'll go through later. They don't apply to this chart at all. There's no connection between the backtesting system and the rules, or the trading system and the rules, except that these custom indicators I created and the trading rules, which fire in sequence, are exactly those as required or described or used in the trading system, but simply visual presentations of those for me to confirm something's happening when I expected it to. Now, this has kind of evolved a little bit into a bit more of an interesting thing here, because now I'm able to watch the day progress and see the signals manifest themselves over here. And actually yesterday take trade. I use them for triggers and, to confirm my my trade signals. So the trades that I am now vetting for my trading business are the two initial balance trades: IB continuation and IB failure. And you can probably work out which is which by the names, right? So first we have to have the IB statistic. That's the first requirement. Take a step back. We don't have an IB statistic until 9:30. How do we determine what that is? Well, here you go. Glad you asked. These are the statistics, open type, and here is the IB statistic. There is greater than a 97.9% probability in all 4 open types that the IB high or low is exceeded at some point in the balance of the RTH trading session after 9:30. So the statistic becomes active at 9:30, and then this probability has been achieved 97.9% of the time. Looking back over 609 days where we opened higher in range, looking back at a total data set of 2,000 trading days. That's the statistic. It isn't a statistic until 9:30. That's important. And there's a couple of things that I'll say here. I hope. So let me just try to get myself organized. There's something goofy here. So this would have been 15. 1.5, I'll call it, and then the backtesting signals would have been about. I'm trying to get these chapters. Sorry, I'm trying to get these chapters manually done so that at the end of the stream I can put them in there. I've already talked about how important they are. So we know about the risk. We know about the trading signals as I use them in my backtesting. And we know that there's not a statistic until 9:30. Something that's really important to say here, I think. Again, sorry for the delays. It's real important not to trade toward the statistic. What do I mean by that? Well, the POC's been coming down. Prices down here will be, let's say prices trading down here below the POC, below the VWAPs, below the mid. It's much closer to the IB low than it is the IB high. And boy, oh boy, are you absolutely sure that we're going to take out the statistic will be achieved by the IB low. And so you go short. That's trading toward the statistic. And that I have data, my personal data, and sore butt from being spanked doing that is definitely take my advice. Do not do that. Wait till 9:30 till the statistic sets, and then just because it's 9:30, there's still no statistic. The statistic has been achieved after price exceeds the IB high or low. At that point, you can zoom in, you anticipate it, you zoom in, and you decide which of the 2 IB trades you're going to take, if any. I hope that was clear. To re-say that then, there's no possibility of an IB statistic until 9:30. After 9:30, the statistic has not been satisfied or acquired or achieved or whatever you want to call it. until price has exceeded the IB low or the IB high. Then it is the statistic has been achieved. After 9:30 and before the statistic has been achieved, the statistic is active. It is something we're watching for. It is rule number 1 in my testing system. It will be rule number A. And then we wait for rule number B. And then we wait for the trigger. Yeah, baby. Just reviewing the backtesting setup here. It's pretty simple, and you'll see, as I said, these are just indicators. They are not connected to the trading system. But they absolutely accurately reflect the rules required of the in the trading system. So these purpley looking things here are the pullback zones. There's one each based on the IB high or low. There is a continuation zone for each. There you go. And then there's a trigger zone. So there, and that's how it works. And you'll notice that there is none of these levels or signals are visible here yet in today's market. That's because it's not 9:30. The minute it is, these will start to plot. I have also coded across these major pullback and continuation zones to, what am I doing now? Damn it. The book map. And pretty quick, they will be plotted here. You'll see a continuation zone below the IB low and a pullback zone above the IB low. They'll be in these session levels. And what happened now? Ooh, baby. 9:30 happened. So the IB statistic is now live. The IB high will no longer move, nor will the IB low. The statistic says that greater than 97.9% of the days where we opened higher in range, price will exceed the IB high or the IB low at some point in the regular trading session. Now you see the The continuation zones and the pullback zones have now plotted, so they're active. And I'll mention one other thing here. Remember that the statistic says 97.9, was it? I forgot now. I'm all excited here and I forgot what I'm doing. Not what I'm doing, but I forgot the number. 97.9% of the time, the IB high or low will be exceeded in this open configuration. What does that mean? That means that 2.1% of the time, of the days, neither one will be exceeded. It's not 100%. It's a statistic. It's a probability. That's important to understand or to, take on board. Excuse me. That's real important. Yeah, I think, in my opinion anyway. And this might be a good point to talk about. The range requirement. That is something in my trade plan. Just take a look at this book map. Hell of a lot of lines going on here, huh? Each one of those lines, except for the pullback zones and the continuation zones, all of these other levels, which you see identified over here on the session prices, are a spot where price may react. What do I mean by that? Well, just look. Here comes price up. It fluffles around the POC a little bit here. Then it comes up through these two without much trouble, gets to the developing value area high, comes to a screeching halt, and comes back down to the POC. Did you know that was going to happen? I didn't. Here we go again. Here we come down to these levels down here, which is that's not one. This is a pullback zone. So I'm trying to focus on only these session price levels, which would be understood by a vast majority of traders. These pullback zones and continuation zones are just something in my world. Well, and now our world, I guess, to do with this stream. So I used to have a real hard and fast range requirement, but I've relaxed that a bit because I found that if I stuck to that absolutely, I would stand here days or weeks at a time without a trade. And what that range requirement says is that if all things are equal and I have a signal or a trade signal, the final criteria that I would use discretionarily is that I must have an unobstructed path to my first risk neutral scale. Translated, that means that if I'm going to enter a trade right here, let's say, just for the hell of it, I've got to have 3 points with no levels, no big liquidity between my entry and the next level. There's got to be a minimum of 3 points because that gets me to my scale, my risk neutral scale. And then it's helmet on and feet up and see what happens next. But if we're going to go short from here, what is that? That's 91. And there's 89.25. That does not qualify. That is not 3 points. That was quite a limiting rule, and I think it's still a good one. That's my range requirement. I'm now in the course of vetting these trades, of course, I am using the signals to basically eliminate discretion and take the trades as if I were the backtest and see what the outcome is. This is what I did yesterday, and I will do today. And if no trade presents itself, boop, that's it. No trades. Fortunately, I don't have a problem with over trading or can't control clicking the mouse or, FOMO or all that stuff. I got rid of that a while. I'm not rid of it, but I've learned to recognize it and not react to it, which is something we can talk about later. I'm trying to keep somewhat to script so I don't, or, to the one that I've been using for this chapter marker so I can sort of keep things, so I can kind of keep things in view. And let's take another look here at the IB signals and stuff. Now you see the plotting has now begun, right? And those levels are now over here. Boom, boom, boom. Just these simple price levels. The way the signals work is, if I can do this without breaking everything. I guess the answer to that is no. There we go. The way the signals work is they are 3. A is the IB statistic. So when the price comes down, you will have an A and exceeds meets the criteria and including taking out the IB statistic, exceeding the IB low. You get an A, which would signify the first rule for an IB failure, and an A red, which would signify the first rule has been satisfied for an IB continuation trade. Then the second rule is a B. No B up here yet, B down here, and then the trigger right there. Go short. And that's exactly what I did yesterday and took a stop. So that is how the rules apply. And I mean, real simple. It's only 3. And they are, we take out the IB statistic. In the case of a continuation trade, we trade down to, close within the continuation zone. Price pulls back to within 1 point either side of the IB. That's what these dotted lines represent. At which point we get a trigger. Short. And if you stuck around long enough, you got A, you got B, you got a trigger long, which would have also been a stop. Now, if you hung around a while longer and and you were actually a computer trading this and not a human going, oh man, 2 stops, what? There's B. There's a trigger, that's no good. There's a trigger, that's no good. There's a trigger, that's no good. Here's a trigger. Oh boy, is this the way back? This is the way rearview mirror traders work. Oh boy, I took this trigger and down I went and I made all my money. Well, that's not exactly how it went. Would have gone for the day. And it's important for me to point out here at this point, at this juncture, that I am verifying that my coding and design of the system is correct in its functionality. Did I absolutely achieve, when price goes to the pullback zone, did the B fired? When the IB lower high is statistic has been satisfied, did the A fire? Once all of those things are working and I'm completely confident about that in all configurations where they may go wrong, then I focus on the backtesting and I can optimize or change the rules. But you got to start someplace. So that's the someplace where I've started. And that's how that goes, boys and girls. That's how she goes. Didn't want to do that very bad. I got to figure out a better way to do this. Need to put something right over here, a quote page or something. So here we are. This is kind of interesting, you know, to be developing something and trying to, trying to develop something and working out these kinds of ideas, you know, alive and in the live environment for all the world to see. But that's the nature of being really intent on complete transparency and accountability. I got to figure out a better way to do this little deal right here. I don't know how I can do that. With this on full screen, I like that, but this is the trading rule. These are the trading rules. I need to have something where I can click to move my screens in the stream from bookmap to IRT. I'm not. You see, if I select the IRT chart, now watch this progress bar. If I click the arrow to the left, which would put me over on bookmap, you know, when I did that, you see it changes the progress bar to left. It moves this chart 1 pixel or whatever the hell it is, something to the left. And then all of a sudden it's not automatic and it's not automatically updating. So I need to fix that. If I put the down here and go to bookmap and then go back, nothing happens. So maybe I need to, on my other bookmap or my other IRT screens, I've got the quote page up here and I typically can use that. I just slap the focus up here and then I can jump back and forth. Wow, look at this. Look at this NQ. That's pretty tight, huh? We had a little bit of profit taking here, but just basically building out a rotational profile here on the ES. Pretty crazy. I might just slap this over there. What's something? I don't know what. If I use this one, it changes from view to view, which is not what I want to do. I mean, obviously this is just like everything else with the stream is me thinking out loud, right? And I want to repeat about every 15.5 seconds. So these are all just indicators that I have developed and put on this chart to visually confirm to myself that these rules I am trying to develop for the backtesting system and trading system are happening as and when I expect them to. And by no means is this a vetted system that would be applied in the live market, right? I mean, I am applying it in the live market manually because I can do that. But it's not this trading system running this chart. And want to be sure I want to be sure I have that identified properly. Now what I could do, I guess, is this stupid thing here. Let's get rid of that damn thing. Let's go like this. Let's throw this up here. Much as I have the come on. This thing is just a quote page to verify that the VPound variables are going into the right spots as I expect them to. This has got nothing to do with trading or current market or anything you ought to be worried about. It's just for me when I'm developing the rules. Now let's see what happens here if I go full screen. Yeah, okay, great. Then I can grab that and smoosh it back and forth without interrupting the continual update on that chart. Yeah, there we go. Good, sweet, okay. Yeah, it's probably humorous to many of you who are code warriors. Well, you see what we're doing. I mean, this is just a chart of it. It's not the full, IRT usual view, but this is my backtest or rule confirmation chart, whatever I want to call it. I think I call it backtest. And as you see, no rules fired. These lines all start plotting. These levels all start plotting at 9:30. No rules will fire until I have set them here. I'm using CPound variables now for these rules because I wanted to be able to do quick what ifs. None of the rules will fire until we have session start plus 60, greater than 60. You know what I need to do, I'll bet you? I have to look at that actually. And session close at 90, so this would be 14:30. I might change that to 75, so that'd be 1:45, or maybe 70, so it's 10 or 5 minutes past the market on close and balance. I don't know. Here we go. Anyway, back at the ranch. Market profile. Micro composite chart. ES and NQ minis. And here we stand. Heart and hand. Forgot the rest of the words. To the song. I'm going to get rid of this down here from the notes thingy. Well, yesterday at 1:50 in, I was in a trade and then got stopped, as I pointed out earlier when we were reviewing the signals. And here I am at 1:53 in the stream, and we're just fluffling around here in the middle. I'm thinking this could be a chase mama around the couch kind of a day. You never know, huh? Or chase whoever you prefer to chase around. I had the funniest thing happen to me that I was not aware of. As I said, I'm an old cowboy from Montana, and that's the truth. Google. Oh, it was YouTube. That's right. YouTube sent me a thing. There we go. What the hell was that? Somebody said something. Now, there is uncontrollable risk. And that wasn't a good thing. There was no planned news. That is a statement or something. At 9:58. And they don't like that one at all. If you were short, you're thinking you're fat, dumb, and happy, I'll tell you. Now, we have just taken out the IB statistic by that little hoop-de-doo. And that kind of turns the whole plan on its head, because I can tell you without looking here, we're going to see B and A. We're going to see a B probably, because we've gotten down so far. Way past the pullbacks here and still going. Oh, something big happened there. I want to point out to you that that's 40 handles. That's from 92 to 52 in about 30 seconds. This is why in this environment I continually say in the pre-market, limit exposing your account to risk to A+ setups is the most intelligent thing you could do now. And quite frankly, well, first of all, I have no problem because I didn't have an A+ setup. Had I been in a trade and I was long, you're screwed. And tell me about how you manage your risk. Remember that a stop, changes to a market order when price gets there. And the market order says you'll get filled at the best price they can, and that could be down here. That's called slippage. IRT can't even keep up. I don't know what the hell that was, but yeah, now you see the A. And there's no B because we came clear through it. And look at what we're doing. Well, all right. Yeah, there's so much volume there, IRT can't keep up with it. And it's selling off hard, and I can't get back to IRT. These are lags. It's still selling down. I can't even get over to show you IRT here, I don't think. Oh yeah, it's trying. It's trying to get itself together, but it's not having a very good day. That's for damn sure. This is the signals trading chart, and it's trying to populate. So it's a big something's. God Damn it. This is not fun. And I can't begin to tell you what the matter is. Well, let's move back to Bookmap, who is plotting, and let's see what the hell happened. Or somebody died, what? I don't know. What's your guess? Really? Trump have been contacted by other countries who are extremely angry at China's trade hostility, which comes out of nowhere. I have, so some bullshit on a privately owned social media thing. What is wrong with our country, This is national policy. Oof. Well, that's what the deal is. And what does any of that mean? And first of all, take a deep breath. Is any of this true? Are any of these related to facts or actual news? And I can assure you that we have no idea. Sorry. This is it. This is the hammer right there. There it is at 10 o'clock. Now that just prompted a 50-point sell-off. Oh, more than that. Holy shit. 92 to 22. A 70-point sell-off in the ES. 70-point bottom falls out of the ES based on something that may or may not be true. And look at, wow. Is this just all misdirection? Is it true? That's the unfortunate place we are, in my opinion, now. This is the President of the United States, and he is making statements on a social media completely unsubstantiated by anything. Is maybe all true. Maybe, just I won the election. You know what I mean? What do you think? I don't know what to think. That's the really unfortunate situation we're in at this, in my opinion. And this IRT still can't get their shit together. Well, so the trade signals are not having a good day. Look at that. We're not getting anything done around here that matters. Wow. Let's see if I can get something else plotting properly. Okay, there we have the micros. Off the bottom. Look at this shit. Look at the market profile. The market was waiting for that, huh? Now this is not good. Why it is suddenly decided that this is part of the active layout, I've got no clue, but that's not a good thing. It seems to have completely corrupted the active layout of my basic chart. which is all of that you're used to seeing every day. Son of a bitch. Well, I am going to just let this cook. Now what we're going to do here at this moment is jump to the micros and try to keep up with what we see on the micros. Look at this market profile. And here's the day. Now that was one hell of a selling tail. I'm sure they'll probably bring it back up. Notice where they stopped, right at this support level. The market typically, and this is, yeah, absolutely, put on your tinfoil hat and whatever else you want to do. But I mean, I think that they are just waiting for this kind of thing. And unfortunately, I don't think it's above the realm of possibility that there's a certain collusion going on with the announcement of things like this. We've already been down that road 3 other times now where Trump is, on Truth Social, 6 a.m. Today's a day to buy stocks, and then miraculously at 9:30 in the morning, an announcement comes out. The stock market zooms up. It's really sad to say, but it's kind of like the Fed, and there's a lot of people that think it's a great idea, and that's what the country's all about. I don't agree with the fact that the Fed should be politicized. I don't believe that we should weaponize the Justice Department, and I don't believe that the president ought to be giving out stock tips. You know what I mean? I just don't, or profiting from stock tips himself and his family for like the crypto company they've got and all this other stuff. It's just crazy. But that's the world we live in today. I'm more pissed off about the fact that my IRT has gone upside down. Now, how can I get rid of this? For some reason, this chart has pulled itself across all of these, and let me see something here. Yeah, that's what I thought. This chart, I'm going to save it, okay? But I'm going to, somehow it has decided that it was selected and it has been pulled into this layout. So I'm going to delete this chart at this moment, if I can. Boom. Got to be real careful. There we go. Back to the original layout. Phew, boy, that was a pain in the ass, huh? Well, that's pretty crazy. Fake news, baby. We got big delays across the board. These are lags in milliseconds. Volume's zoomed off the map over here. I'll bet you the volume is over $1.75. What do you think? Well, first of all, we can't switch to anything because it's still trying to work its magic and calculate everything. We had I heard a really interesting statistic while I'm waiting for this to happen, if anybody cares. Tom Sosnoff has retired or left Tasty Live to start a new thing. This will be his fourth career. He spent 20 years as one of the most successful floor options traders. Then they left that and built and developed Thinkorswim. then sold that to TD Ameritrade, who was subsequently purchased by Schwab. After that was sold, they started Tastytrade, which they built up and which has been sold. Now he has built 2 trading platform multimedia channels, which have sold for a combined $2 billion. So doesn't need to work, I guess. And he's starting a 3rd thing. And I was curious what it was, because I admire what he's done. I think what he has to say is valuable and important, and makes sense to me. It's like Tom B in the Traders Lab idea, only on a bigger scale. And he made a real interesting interview. If I can remember or figure out how to post it in the chat here, I will do so. Hey, Richard, did you see that big hoop-de-doo on Trump's Truth Social thing? I suppose 70 handle drop in about 10, 15 seconds. 100% unverified tweets from Truth Social, which is what I say every morning about, mind your risk, Anyway, Tom Sosnoff was talking about this. He said when they started Thinkorswim, I think it was, they built the platform also besides the whole channel and whatever you call it, TV show or whatever it is. Their system was processing about 2 million quotes per second on Thinkorswim in those years. And this is something that the IRT guys we've also talked about. Today, recently when he just left Tasty Live, they're processing about 200 million quotes a second. Think about that. And that was what there's actually something in one of the videos on IRT about Chad was saying, well, yeah, you see these lags up here on IRT? Yeah, there's going to be lags because the volume of data coming down the pipe now is so overwhelming. Pretty soon, the math just starts to lag and works its way out of it. So I thought that, and maybe I'm wrong. Okay, maybe it wasn't 200 million. Maybe it's, even if it goes from 2 million to 20 million, think about it, 20 million quotes per second. Jesus Christ. Wow. That's just, I hope I could find that somehow. That I listen to, YouTube. I try to listen to some intelligent or informative YouTube thing and from my phone when I'm falling asleep, just to kind of distract my mind from what I'm thinking about. And that I typically like, that's one of the reasons I like Patrick Boyle a lot, Richard. His voice is one of those male, kind of a deeper male voice, which puts me out like a light. It's like a hammer in the head or some sort of handful of sleeping pills. So, and that's kind of the way that interview is. And I appreciate that when somebody's like that I'm not just listening to some stupidness. And also it helps me fall asleep. Well, we're down to 7 milliseconds here now. If they ever get their shit together, we'll wind this baby up and see what it looks like. But just have a look at the market profile here, which I believe you can see. Yeah, exactly. This is a classic example of mind your risk, only put on A+ setups when you have that, when those are presented to you, and abso-freaking-lutely always have stops in, a full bracket in the market. Now, we all know, and you very certainly know, your stop turns into a market order when price gets there, but it's better than nothing. You may get slippage, but you'll get out. So, yeah. And those are 4 or something tweets on Truth Social. No facts, no backup reporting, no anything. Maybe it's just bullshit. You know? I mean, I'm not saying that it is, but it's a possibility. It's really incredible. The world and the age we live in is pretty incredible. Well, I don't know if I can get anything to work right here on IRT yet or not. Oh yeah, a little bit. It's still trying. I'm trying to get zoomed in so we can see price, right? Price is way down below us here somewhere. I'm having there you go. That's not great, but it's better than a poke in the head. I would suggest if you're looking at my screens, look at your IRT and look at the market profile. That's ticking right along. No problem, no delay. Look at that shit. Talk about a string of singles, huh? Oh, yeah. Oh, yeah. All right, let's see if we can move away from this now. There we go. Okay. Obviously, my anticipated world famous, hugely valuable, super secret backtesting trading thing has gone screwy right now. Actually, here it is. So here are the levels as they start to plot at 9:30. Here was what we were doing, and here is, I think I'm going to tweet something. Of course, these rules are completely off the table and have no bearing anymore, right? So, but that's reassuring to me that they're working. I at least like that part. Something that I've done, Richard, that you may not know about. Oh, sure. Yeah, exactly. And of course, they were letting people die by the thousands and children starve to death in Gaza trying to get the timing right on that peace price thing. You can't tell me. They're approaching this whole thing, in my opinion, they're approaching this whole thing as reality TV. Like the Truman Show, right? That's what I think. Anyway, I have coded across to my levels here, my pullback zones and my continuation zones. That was kind of handy. I mean, that was kind of fun. Did that last night. I have not corrupted the session prices here because I push those to lots of folks, as you know, and they'd be going, what the hell is this? So, and these pullback zones and stuff are only for me, and they are only applicable to this system that I'm working on now. So, there you have it. Man, oh man. Well, we got one hell of a 3-bar reversal going on down here. If this isn't the beginning of a 3-bar reversal, I don't know what is. Yeah, baby. And what I recommend about this is go get yourself a cup of coffee or chase mama down or whatever it is you want to do, because this is not an environment to put your account capital at risk. I certainly have no trade for this. If you do, good for you. If it's vetted, good for you. If you like gambling or video games, knock yourself out. Let's try to kind of, I'm not sure if that ever makes sense even. Whoop. So, god damn, something is not right with this mouse. Look at that. Huh. Well, I'll leave it there then. To hell with you. Oh, he's already he's already he's got his shoes off and he's counting. Boy, he's doing sums, man. He's adding them up. I have not spoken to President Z, so he has taken some random thing that nobody has proven yet, nor has there been any announcement from anybody else about these supposed letters, and dumped the market 70 or 80 points. Now, do you suppose any of the related companies to Donnie Boy or Eric or any of those folks are getting long right now? It's weird to even have my mind go there, because that is so, conspiracy related. That's something like I would expect that Patel or what's that crazy guy with the beard that said all of Sandy Hook was a fake deal, Jones, whatever his name is. I have no use for those people at all. And for my mind to go down a similar route to that is really shocking to me. But in this day and age, it's not out of the scope of possibility. I mean, I watched January 6th happen, and that was 100% fake news bullshit. Sorry, but there you go. Call them like you see them, I guess. You got them, smoke them, right? It's crazy. I see nothing in any of this news about, well, the Swiss foreign minister says they're hoping for a trade agreement at the beginning of 2006. Nobody else is talking about this at all. So what is it? Is it another real dramatic misdirection? Something just happened to my whole... Oh, okay, no, it didn't. I was going to say something just happened to my whole... We're looking, and they're still selling it down, too. It ain't stopping, baby. It is not stopping. Well, they're just crossing 100 points. Points on the ES. This kerfuffle started at about 92, and we're just rolling through 93. 66.93. Starting at 67.92. And I wish I could get over there somehow. There we go. Well, that's one hell of a range, huh, Richard? Jesus Christ. Well, if you were planning on a boring Friday, surprise, surprise, surprise. Well, let's think about this in fun terms, because what else is there to do? If you were short a one lot, you just banked $5,000. Ah. And, I suppose we could say that 50% of the people of traders were. And then there's another 50% that have just had their account blown up. I guess. Look at this. You can't really see it, I guess. Well, yeah, you can, I guess. Where the hell did my mouse go now? Yeah, this isn't playing right here. This goddamn things are all discombobulated. Too much data coming through, I guess. Why won't you work, some bitch? What I was going to say was, look at this volume profile. A little, did he really say that? Yep. You can see the thinking, holy shit, wow. Did he really say that? I don't know. Did he say that? Yeah, he did. Down it goes. If you can't, laugh at it, what can you do, I guess? Getting mad or crying about it doesn't help. And there's a whole bunch of people over here right now marching around, cussing Chinese people, spitting on somebody next door who was born and raised in America. Based on what? On exactly nothing. One person's tweet on a private social media that they own. Wow. This country has really taken a turn I would have never expected. Well, it's starting to think a little bit now again. Look at that candle, baby. We got a whole bunch of naked volume points of control out of that one, I'm sure. Well, we only got 3. Yesterday, Tuesday, and September 24th. POC, of course. This is ES only. Yeah. And this is a really good example of something that I try to stress in the pre-market when I'm reviewing the reports and the numbers and all those kinds of things. My thoughts and feelings and comments here are not political or politically based at all. It's all from the point of view of trading. To say, and if anybody had any question when I point out that one of our largest potential risks is the unpredicted or the unrecognized critical political risk, which I go through every morning, and baby, that was it. There is the perfect example of that. Having nothing to do with politics, one man came out on a private social media and put out a tweet out of the blue, and we're off 100 points. We're off 120 points, 130 points in the ES. How can you possibly manage that risk? You cannot. So you need to try to be as aware as you can be, really identify your setups, and always have a full bracket in when you trade. And that's got nothing to, absolutely no political statement at all. It's a fact of risk. Any person, manager, project manager, business person, After they get their business established or their project established and the resources assigned, the first thing you should do as a good business person is identify any potential risk to your business and make a mitigation plan for those identified risks. If this happens, if you're making bicycles and there's going to be a short on bicycle tires, you better know about that risk, I guess. Let's put it, that's not a very good example, but you get the point. The most dangerous situation to any business person or trader is if there is a risk that you cannot pre-identify or quantify. And in this environment that we're in now, and it didn't used to be this way, and that's not political either, we have a potential where, out of no place, a hugely impactful to the auction, one way or the other, could have gone up just as easy as gone. He could have come out and said, we just have a trade deal with China and it's all the tariffs are off. This thing would have been 100 points going the other side. I'm not saying one way or the other. All I'm saying is this is an unrecognized critical risk, and that's why I point it out every morning. Be aware of it. Your risk, your mission as a trader is to preserve your account and grow it via compounding and the law of large numbers. And the way you do that is manage your risk. So there you go. I'm not political, so that's the reason it's important, because so many things over here now are, everybody's got something to say, some soapbox to get on. Mine is only to do with risk. I'm barely able to get IRT to talk to me. Or come on, sweetheart. Dog next door is talking about something. If you can hear that, sorry. Look at this shit. 130 points in the ES. I'm sure somebody at Static, Rod or somebody's got on this short and is just, paying off the house and sending the kids to college and whatever else is going on. Let's see what happens if I can get there. I don't even know. Well, this thing doesn't want to stay. Something's wrong. I don't know what it is. I updated something. I updated the ARC or the Crate, which is a management tool for the no updates to Windows, no updates to Google or IRT or anybody. Bookmap did update yesterday. And the motherboard fan management tool updated, the ARC Crate or whatever it's called. But why this son of a bitch doesn't want to, maybe it's the mouse. This wireless mouse has not been working real good lately. Let me check if that's what it is. It's an old one. I use two Logitech G something or another. MX Master 25 monitors or wireless mice. Let's see if this one works. I have a couple. It's the mouse. Well, I got to get a new one. Okay, so Okay, well, I'm not getting anywhere there, so let's get back to work. Making a few jokes with the boys over at Static, and Lycopene or Lycosine had something to say. Man, it's still selling down. Look at this shit. Stuff, sorry. It's an adult channel, I guess, but. Yeah, well, and so did Netanyahu. You know, that was a big deal in the meeting, one of the first meetings of Netanyahu when he came over here. Yeah, yeah. There's two people that ought to be whose let's say actions speak louder than words, perhaps. If they give that award to him, I will just be pretty surprised and pretty disappointed in the Nobel Committee, to be honest with you. It used to be one of the above politics kind of deals. I don't know. Look at this market. Holy crap. Look at this MC chart. This is a daily bar, right? They're taking back the entire, when did this start? From October, or from September 25th. September, October, the whole month so far. Wow. And what's going on with Looney Tunes over here? Huh. So the BLS is going to publish the Consumer Price Index on next Friday. No, Friday after next, by the end of the month, but not the non-farm payroll or any of their other or any of the other numbers, because they want this number and not the labor market numbers. They want this number worked into the Fed data for the cut. And the Fed meeting is that last week of the month, I think. Now hold on. Let me be letting my, oh yes, and the last Fed meeting, if I'm not wrong, is the following Wednesday, 29th. What a bunch of thinly veiled manipulative bullshit. Jesus. Really disappointing. Really disappointing. Let's have a look at that while we are. By the way, Richard, in case you want more fun in your life, next week earnings season starts again next week. Oh, this only goes out next week. Well, can I get it out to? Oh yes. Let's see what happens if I get it out over here. I don't know how to get this to work. Can't seem to get more than 2 days. I don't know why. Well, let's start with the 28th and then we'll end on the 31st. Okay, apply. Brrr. No, I'm wrong. Fed rate decision must be the week before. PCE indexes are not going to be coming out. I don't know. Now I'm curious. Well, where's this world famous Fed rate decision? Huh. I guess I'm upside down. When is the October Fed meeting? There's the beige book. Oh, here we go. Is this it? Tuesday. Bowman, Powell speaks. Now that's not the rate decision. Well, I don't find it. That's pretty weird. I guess I'm just upside down and don't know whether I'm foot or horseback. I know there's a rate decision in October, and everybody's expecting a cut, and that whatever his name is, the White House guy who's been put on the Fed, another anomaly I would have never thought I'd see in my life. He's still an employee of the White House. You know, he hasn't even had the self-respect or the, courtesy to the country to quit that job. He's still sucking 2 salaries. What an ass. And anyway, this Moran guy. If you want to read something spooky, Richard, Google Mar-a-Lago Accord, written by Moran, however you say it. So anyhow, I thought sure the final Fed rate decision was that last week of the month, but I don't see it in the news, so I give up. Well, I guess I'm going to have to retire my old mouse here. Boy, that's pretty disappointing. Down 130 handles. Jesus criminy Christ. Who'd have thought? And on what? Really, stop and think about it. What did that news say? I mean, okay. I don't know. I know I'm pretty disappointed that I didn't get any of my trading underway today. But in this environment, I am certainly not. I'm sure as hell glad I wasn't along. You know, that would have been a pretty thorough pistol, right? But now, taking the rules to heart, it would be impossible for me to be long. Because there has been no signal. There has been the A signal and nothing else. So, my risk was contained, and there you go. That's my story, and I'm sticking to it there, boys and girls. I'm so far off a script now, I don't even know what to think anymore about all this. Oh, this might be something to bring up here today. The monkey mind. My monkey mind speech. Oh, God. I hope I've been doing this right. So, whether you're a creationist or evolutionist or whatever it is, I think everybody, I may be wrong, but I think everybody agrees that the human species has been evolving for a long time. Because, just look back at the fossil record. We have proof of thousands of years ago. The Homo sapien and Homo hominin or whatever they are. So our instincts and our wiring has been developing a long time. And within that wiring were things that helped our ancestors survive and thereby hand down the genes, which continues that wiring. It's selective adaptation, selective breeding. That's how you get, Black Angus or cattle or beef cattle or whatever. That's what you do. A special breed of dog. That's what it is. It's not like it's a big secret. So, FOMO, fear, wanting to be right, the desire to win or to be correct, and therefore chasing or revenge. Those are all baked in emotions that you're never going to get rid of, in my opinion. People that say, oh, you got to, eliminate that and do this and do that, they're just blowing smoke up your ass, because that ain't ever going to happen. What you have to be able to do as a trader, and remember, this is my opinion, you have to recognize be very vigilant and aware of your state of mind and those opinions and those emotions. And when you feel FOMO happening or fear happening or wanting to chase and get even happening, you do not act. You recognize that. Push it off in the corner, say, thanks very much, Hyde, I appreciate that. And you don't act on them. That's the difference. Now, sure, psychologists are going to write books and they're going to have webinars and they're going to put stuff on YouTube, because guess what? That's how they make money. Steenbacher makes money coaching people and telling people how, psychologically working with people who are traders. He doesn't make money trading. I don't think. He might make some, but, that's not his living. So remember that. That's my thinking about it. Be aware of your emotions and don't react to them. Not control them, because that's, connotates a fight, right? But you just don't act on them. And boy, that was one hell of a drop. That I don't think I've seen that. Well, I guess so. That was pretty close to April. It was pretty close. Not as dramatic as April, as the famous foam board tariff. When we showed those freaking penguins who's boss, boy, we show them who's boss and slap some tariffs on them. An island that takes 2 weeks to reach by boat from Australia towards Antarctica. And we put a tariff on them, inhabited only by some, I suppose, random seabirds, but primarily penguins. The staggering part of that kind of folly to me is they don't apologize or even act embarrassed. It's the weirdest thing. I mean, if I said something or did something stupid like that, I would expect anybody on this channel or the internet or anybody I know anywhere to go, what the hell is wrong with you, dude? And apologize. Nothing. Really weird. And this thing keeps going. Now the market profile's clear off the bottom of the freaking chart over here. I don't know if I can get them together or not. It's just crazy. All right, I'm going to take a walk around the front of the house here and grab some water and refill my green tea glass. And Mama's waving at me, which usually signifies snacks are provided. So I hope you were managing your risk, not in a trade. And if you were in a long anyway, you had stops in the market. If you were in a short, good for you. Well, I was expecting to come back here and see a big up in the market and look for the tweet. Never mind, I was mistaken. Oh, maybe not. Well, they readjusted that inventory down where they needed it to do some more. They needed to put on some more inventory, apparently, for whichever one of the, maybe whatever that moron at Palantir's, whatever his name is, Peter Thiel. Maybe they needed to buy some more, huh? I'm afraid to look at the damn news. I don't know why this isn't working like it's supposed to, but so weird that all of this happened. 130 handles off, almost 140 handles off. No, 130 off the ES, and there's not one word about it. Other than the tweets. The only other thing is France foreign ministers, we expect a trade agreement with China, and there's not anything about a whole hue and cry of other countries saying, what is all of this, that I see. I mean, maybe there is someplace, but it's just, I find that pretty, talk about a knee-jerk reaction. I've not spoken to President Z because there's no reason. Well, there you go. Whatever you do, don't go to the source of the horse's mouth. Just believe some gossip horse shit. Wow. That is pretty. And if I may be misunderstanding those words, that. I've only been working on English a short time here, so maybe I misunderstand. Pretty crazy. I have no way. The only thing I can say is that at the moment that came out, I obviously recognized what was going on and said, that's news, stand by, I hope you're flat, manage your risk. And that's why I preach that, in the entire stream at one point or the other. And now, it doesn't make a lot of sense, I guess, to talk about, really talk about trading as a statistical business, not a video game or gambling, but we can, I guess. Crazy, really crazy. So, there's a lot of ways to approach this, and the first thing I want to make clear, this stream is not my way or the highway, right? It is my virtual trading journal, and I'm talking continual talking or narration is to put my thinking, get my thinking incorporated into the stream, because otherwise it would just be the video. And also, I'm talking to myself. And I'm a firm believer that your subconscious mind believes what you tell it. And what you specifically what you verbalize out loud to it, that gives power. Words give power to thoughts. And your subconscious mind buys into that stuff. So that's what I'm talking about a lot of the time. No, okay. I believe, first of all, it's critical for me to have a a consistently profitable business here, and trading is what I have selected to do. The career that I had, my own businesses most of my entire life, and latter few years, 10 or 11 years, I got roped into doing something for another company, which kind of lulls you to sleep. That check just falls in the bank every month, and you got insurance and blah, 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 blah. And I'm no spring chicken here, as I said. I'm an old cowboy from Montana. Well, that evaporated around the first of the year, just after. The company was purchased, and the new outfit just whacked a bunch of people off, me included. So I'm standing here thinking, what next? Well, I've been doing this for a while, so this was the logical solution, and it was the solution that I have worked towards for a long time. Okay, so I'm approaching this as my business, which I will develop into consistent, reliable profitability. That doesn't mean I'm going to be a gambler or a guesser or a huncher or a throw darts at the waller, I don't believe any of those have any kind of consistent longevity. Yeah, you can win. Anybody that for whatever reason was short right there is happier than a pig in the mud, and good for you. If you were short here and had no profit target, holy shit, huh? What is that? It's around $8,000 on a one lot. Great. Anyhow, well, what do you suppose the frequency of that is? And equally so, if somebody was long thinking they were going to get a rotation back up, they got a pretty, sick look on their face down around here someplace. Okay. Anyway, so the way you approach trading as a statistical business is to identify a setup which you can presents itself frequently. Obviously, you don't want one setup every 5 years. Preferably once or twice in a day, in a trading day, a session. And then you establish or determine the criteria which validates that setup and validates an entry on that trade. When you have established those two things, you capture a statistically significant data set of that setup and those parameters and determine if it has a positive expectancy or not. A positive expectancy is that over a sample set of trades, and this is where statistical significance comes in, you want to have a large enough sample data set that you are outside probable random distribution. Everybody knows that a coin flip is 50-50. Flip a coin 10 times. Will you be surprised if you get more heads or tails than 50-50. Of course not. Nobody would. Flip it 1,000 times and you're going to be pretty close to 50-50 as expected. So 10 times is within the possibility of random distribution. 1,000 times is pretty much statistically significant or getting there. And that's what you need to do with trading. After you have captured those 100, 500 trades and determined if those specific rules and that specific setup have a edge or an expectancy, meaning over 1,000 trades, I expect that I will achieve T1 X amount of times. I will achieve T1, T2 X amount of times, and I will take X amount of stops. If those add up to a positive outcome, and that key factors within that are, and this is one I love, is these guys that get on the internet with their win ratio. You know, I've got a win rate of blah, blah, blah. Win rate is completely meaningless taken by itself. You can have a 95% win rate and go broke on 10 trades if your risk reward is upside down. So the way you do expectancy or calculate it, you can do an R value or R ratio or whatever, but which is real simple. Your loss, your stop loss, your stop amount is your R factor. It's negative R. That's 1 R. Negative. And then however many multiples of that amount of ticks or points you have positively is your ratio. So it's 1 to whatever. You know, in my case, it's 1 to 2.5 or about 2.36 on this, on these IB trades, and a win rate of around, depending on how you look at it, between 40 or 80%. And then the reason I say that is the way IRT calculates the win rate. It takes the winners, which are T1 and T2, divided by the total number of trades, which include the scratches. But the scratch winners are not included in the count of the winning trades, nor are the stops taken in the scratch included in the number of losses. So in my opinion, the best way to figure an accurate win percentage in this regard is you take the total number of wins and losses and divide the win rate by that. That gives you what I believe is a more accurate number to what you want. Anyhow, after you have calculated that, if your expectancy is positive, you take that trade and that setup every time it presents itself in the live market, and you lean on the law of large numbers and your statistics to compound your trading account. It's not just what I dreamed up, it's the recognized methodology of the most successful traders and hedge fund people in the world. Ed Thorpe, Jim Simmons, Paul Tudor Jones, Ray Dalio, Tom Sosnoff, Tom the Trader, the best loser wins guy. All of them. Tom B, Rod. They all realize that it is a business of probabilities, leveraging the law of large numbers and maintaining and managing risk. Coincidentally, it is also the exact business model of the gaming industry from the point of view of a casino. Have you ever seen, there's only one casino that I know that's gone bankrupt, and I won't go down that road, but that was in Atlantic City, and You can Google it and figure out what's the story there. And that's how they work. They play no game on the casino floor for which they haven't pre-identified their edge and the specific rules. Then on the casino floor, their only mission in life is to play the game as many times as they can, relying on the law of large numbers to manifest that expectancy to their bank account. Do you see dealers freak out when somebody wins? Do you see the pit boss run over and shoot the dealer and change all the rules? Of course not. They know gamblers will win. They know gamblers will lose. And they know that the expectancy, the probability, is to manifest their expectancy percentage to their bank over the large sample size. That's the law of large numbers. And I firmly believe that's the case. And that's the way, I didn't figure it all out, but and I'm an old cowboy. And I can tell you it makes sense to me, and I'm not going to try to reinvent a wheel here, I don't think that would be a good idea. One caveat that you must do when you're capturing your data set to determine your expectancy is all parameters have to be identical. The stop's got to be the same. The T1's got to be the same. The T2's got to be the same. You can't change any of them. Ideally, the qualifying parameters, is it in alignment with context? Is it counter trend? Where am I above this or above that? You can get further and further, filter it further and further down to more specificity, but on the larger view, you can't change any of those prime parameters, stop loss, T1, T2. They have to be the same. Or the trade that you've taken cannot be included in your statistical analysis data set because they're different. How can you possibly say, I achieved T1 50 times over 100 trades, when T1 is a different value all different kind of times? What do you do then? So do I lean on 10-point T1, or how about 3? Or, so there you go. It should be obvious. And that's what I'm doing with the backtesting thing that we've been talking about. I've been talking about a lot. And these I've even coded in to these levels over here. My pullback range and my continuation range is for the IBs high and low to help me visualize and take these trades in addition to the backtesting. And one other thing that's important you may not know, to calculate your expectancy, remember I said a minute ago that win rate was completely useless, and it is by itself, which I also said. But it is a key component to calculating the expectancy of your sample data set. And it goes like this. The win rate times the average winner minus the loss rate, times the average loser, gives you expectancy. And you better hope that it's a significantly positive number. Otherwise, the setup isn't worth shooting. And you better make sure that it's over. One of the reasons it's important to make sure that you capture a statistically significant, i.e. large enough data set, you could have the most winning setup in the world ever heard of by anybody. And if you look at that over a small data set within a random distribution, and by bad luck on your part, the random distribution happens to be 6 stops in a row, you'll go, this is BS. I don't want anything to do with this. You could be throwing out the most valuable statistic ever known to man. Even anytime I do the backtest with IRT, there is a consecutive winners and a consecutive losers metric on every one of those reports. And very, very frequently you will have 3, 5, whatever consecutive losers in a row, as well as consecutive winners sometimes. But if you happen to look at a small data set that only contained those losers, you wouldn't think it was any good. You also this is also what factors into how you size your trades based on your risk parameters or the risk tolerance of your account. You have to factor in the thinking that you may have a random distribution of stops. Can you take 5 stops in a row and not blow up your account? That's why you size it properly. Well, so here we are. Now I'm going to get ready to go for my lunchtime 4-mile hike here. I do about a 12-miler on Sundays, but I've started doing a daily one to get out and rest my eyes, focusing down the street and a little health. You need to remember that the most valuable tool you have in your trading office is on your side of the monitor. Your brain, your eyes, you process and evaluate all of these signals and all of these inputs, and you need to make trading decisions based on that. So you need to be firing on all cylinders, man. You know, not hungover, spun out, didn't sleep, whatever. You need to be well rested, hydrated, exercise. You are more important than any of the expensive crap equipment you bought. That's for sure. And one of the things that's really important that I kind of alluded to here is rest in the eyes. When we're trading, we're all staring at these screens, meaning that our eyes, short focus muscles are continually contracted, working on the focus for these screens at this specific distance. And that's, clench your fists for 30 minutes, as tight as you can, and see how your arms and fists feel after a few minutes. That's what's happening to your eye muscles, and that's why your vision may be getting blurry, or you may have headaches or whatever else it is. So at points throughout the day, you need to get outside where there's some natural light, focus down the street, a long distance, the horizon, the good-looking neighbor gal, whatever. Not close up and personal, a long way off. That softer focus relaxes those close focus muscles and exercises the other ones and relaxes your eyes. Real important. I'm half scared to click on some of this crap. Budget director, the RIFs have begun. These guys are all doing the government business on goddamn social media. This guy posts some shit on X. Sorry, but that just infuriates me. The layoffs have begun. Oh, there's a great idea. Let's fire a bunch of more government people, because the government is working so fantastically right now. And then let's put in a bunch of lackey morons, like this woman that they appointed to the prosecutor in Virginia that has never prosecuted a case in her life. Her sole career has been an insurance lawyer. Yeah. So, he's going to show everybody, boy, that whole exercise with that ridiculous Doge crap didn't accomplish anything. Accomplished less than 2 hours of one day the United States government expenditures. We spend about $18 billion a day. Thousands of people lost their jobs, tipped the government upside down, didn't accomplish anything. The only thing that did get accomplished was the contracts to SpaceX and Elon Musk stayed intact, and they got money. There you go. It's appalling, actually. It's shocking to me and appalling because like I said, I'm an old person. So, I never expected this kind of crap to happen. I can appreciate kids that don't know any different. They go, well, this must be normal. Boy, oh boy, is it not. Is it anything but? It's kind of like Richard pointed out, the two people that have made statements recommending Trump for the Nobel Peace Prize is Putin and Netanyahu. Well, too bad Hitler's dead. I guess he would have chimed in. I mean, Putin, if he's got any, talk about the pot not calling the kettle black. Jesus, Christopher Christ. There's a guy that ought to have a viewpoint about peace, the Peace Prize. Jesus, it's just disgusting. So here we go. And, what to say there. You can see it all in the charts, so I don't need to say anything more. I don't guess. I hope. Let's see what's going on in backtest world. Well, nothing, of course. No possibility for any signal. The signals are up here. Here we are down here. So that's over with from my point of view. Volume. What do you reckon volume is without looking? Higher than hell, I suppose, huh? 164% volume for this time of day. And look at this shit. The average true range went up to a high of 29.17 or whatever it is. Those are points per 5-minute candle. Points. Handles. Not ticks. And now we're down at 1775. Holy. Oh, baby. Oh, baby. Oh. Yeah, well, I'm sure they're proud of themselves. And it would not be at all surprising to me if this whole thing wasn't cooked up and a bunch of people were standing by with long orders. I mean, that's just how goofy this outfit gets. That's how crazy some of the things have that have come to the surface are. Stuff that you would never have expected, or I would never have expected. Crazy. NASDAQ didn't have much fun either. Huh? Oh, I'm afraid of what to even look at what that was. Well, there's 24,670. And we were 25,400, so 1,000 points. Oh, 100 points. What am I talking about? I like the 1,000 better, though. Sounded more dramatic, didn't it? Okay, I'm going to turn on some Moki over here and start exercise. Get ready for my little hike. Wow. Pretty darn crazy. That's all I can say about it. Really crazy. Imagine. Just some random goofy tweet with no supporting information or data or corroboration or anything. Is it true? Was it fake news? Did it really happen? Was that really Trump? Was it hacked? You know, I mean, goddamn. No, let's just hammer it about 100 points and then figure it out. Reminds me of a line from an old movie about, you know, shoot first, shoot second, shoot some more, and then if anybody's alive, ask questions. Kind of the same idea, I think. Well, this is pretty weird. A pretty fitting end to a useless week. I wonder if there's any confirmation about any of this stuff anywhere. I don't seem to have my mouse working right either. That's kind of annoying. Let's see what Financial Times has to say. Trump threatens massive tariffs on China amid critical minerals dispute. So China said something that made Trump mad about critical minerals. And oh, look here, this chick won the Nobel Peace Prize. Good for her. Well, that's what pissed Trump off. What time is it? No. He tweeted that out about 10. I was going to say that's what made him mad, but I'm sure it didn't help. Well, I don't see any news. Do you? Yeah, this is another one of the ones that person that Trump has told the DOJ to go after. find that so funny because he's a year ago. They were all over the news about the horrors of weaponizing the DOJ, the Department of Justice, Trump and the MAGA camp. And they have come out in spades to do just that, which is so weird. But the interesting thing about what happens over here now is that, I forgot I'm not subscribed to Financial Times. Oh, look at here. 11th hour campaign to land Trump a Nobel Prize. Jesus Christopher Christ. That's all they care about. Most everything that seems to be being done nowadays is just to, it's like, it's a reality TV show, in my opinion. You know, they let women and children starve to death in Gaza so they could time this crap with the peace, you know, the ceasefire or whatever, for the week that this decision was being made. Prove me wrong. He's crying about the Gaza deal or whatever and shit like that. This is a disaster here. They better not let that happen. Yeah, I don't know. I don't see any corroborating. Jesus. Just washed my tongue. I can't do anything with it. News. Going to lay off. Federal employees going to be laid off in the thousands. And somehow that makes good sense. I mean, somehow that's a good thing. I don't get it. And what happens to all of the people and all of the jobs and all the things that the federal government does for the country? Who's going to do that? Are they going to hire a bunch of new mega people? I mean, I don't know what the thinking. I don't know what the next step is in that logic. I'm not saying that there is not a logical next step. I'm saying I don't know what it is. You know. Other than Looney Tunes, man, I can safely say I think it's got a lot of that involved in it. It's just like making, you know, foreign policy and governmental state policy on social media. Jesus. Now that is a pre-calculated, methodical decision. What sector of the population of the voterate do you suppose spends all their time watching a couple of specific whatever you call them, social medias? And so that's where you put that kind of information out. In other words, you're feeding that audience. I think that's what I would do if I was, you know, in that position. And here we are down at new lows, man, 6,600. Well, I'll tell you a secret. 2 days ago, Tasty Trade said they were expecting the aftermarket experts or something. they were expecting a major, a big pullback on the S&Ps was imminent, they suspected, and it might be a buying opportunity. And they speculated it may be kind of crazy, but it could get down as far as 6,600, 65. We're at 66.58 now on one frickin' tweet. How stable do you suppose that economy and market is? On an unsubstantiated tweet about a potential something that might happen about rare earths, minerals, maybe. No corroborating facts. No, here's a copy of the letter. No conversation on any of the normal news outlets. Pretty shaky ground, huh? Pretty shaky ground. So what do? You jump on your 401k and you buy hell out of them? Look at this thing. Look at this thing. Anybody that was short, for whatever reason, boy, oh boy, good for you. That's really cool. I'm going to get my little old wrinkled up ass ready to go for a hike. Have a great, the music's on. I'll leave it on Bookmap. Take a quick run through the roses. Here's what we have so far. It's going off the bottom of the screen there, and I can't seem to fix it. Volume is higher than balls on a giraffe. Watch this ATR. We pulled back from 17 now. Just since the last time we looked, it's 15 quarter. We're up to 29 and change. Those are points per 5-minute bar. That's a lot of points. That's a lot. And here we are with Mr. Backtest. So this thing keeps going off the bottom of the frickin' screen. And obviously, we've had 1A come by us here. There's a rule 1. We would have to get up here, do this and that and something else to get any of the other rules. This is completely off the table for the day. There you go. There you have it. I'm going to take my own, I'm going to eat my own dog food and go out and rest my eyes, get some UV, and take care of it. Get a 4-mile hike in real fast in an hour. So there you go. Music's on, and I suggest you do the same. Well, he's going for 200 points. He just keeps rapid fire succession. We're going to jump the tariffs and we're going to fire thousands of employees. Really great ideas all. A new low. Wow, I tell you, I wish I was short. I mean, my go-to trade position, I prefer shorts, I think. At least I used to. Not so much anymore, but you know, and all you had to do was just any one of these pullbacks. Any one of them is, and any one of them are, you know, like 60 points or something. Wow. A lot of, probably a lot of accounts blown up and a lot of accounts made today. Had I not been so fixated on my procedure and my rules, you know, this is where you could just throw a dart and go with context and probably do great. If you know, and obviously if you look at it in the rearview mirror, that's real easy, isn't it? It's real easy to see what you could have done today. There we are. Now, let me point out that these are 5-point price increments in order to get the range and scale. So, if I were to take a short or take a position and price moved from one notch to the next, I would be stopped out +2. Almost double. That's pretty incredible. Now, on the other hand, of course, you can say, well, and I shorted this pullback, and I shorted this pullback, and I shorted this pullback. Okay. You did all those things, good for you. And I'm going to head out to see about this walk. Well, that was fun. I got my walk in here, and now what the hell's going on? I see the market is still having a lovely day based on our dear leader. I hopefully there's a concrete reason for this, not just sensationalism. I know he's pissed because of the Nobel Prize, which is pretty bizarre that, yeah, anyway, hey, I got no idea. I know that it's 30 degrees C outside, which is about something. It's about 84. That doesn't make any sense. I thought 30 was higher than 84 Fahrenheit, but maybe not. I don't know. Anyway, nice walk. The market is what the market is, and I hope you either, if you shorted it, you're up money. You weren't long when that when the tweet storm happened. And yeah, what else can I say? It's Friday afternoon, TGIF, eh? Meet you at the bar. Well, what's going on over here now? I guess the market's calmed down a bit. Looks like. U.S. forces are arriving in Israel. Huh. What a screaming idiot. I just don't get the logic of all this stuff. I guess that's why I'm an old fella standing here trading, and these other guys are doing what they're doing, huh? Yeah. Can think of no other explanation. So yeah, this is a Friday TGIF. I hope you were short or out of the market, as was I. I had no signals to do with my current, the current two trades, which I'm backtesting and vetting. And that is best described right here. These are the rules which are outlined precisely by my trading system. And you need three, starting with an A, and then a B, and then a trigger. Can be a continuation trade, can be a failure trade, and there can be one of each from the IB low or the IB high. Of course, first and foremost is the initial balance needs to be a statistic. It needs to be set, and that does not occur until 9:30. So here we go. And then here we had the tantrum, and woof, down we go. 130, 140 handles in the ES. Wouldn't it have been magic to be on a short? And then just keep rolling out the profit, or take your profit target clear off and just run the stop up behind all the pullbacks, all the swing highs. Of course, all of that is really, really simple when you're looking in the review mirror. Look at that string of singles. I mean, the market didn't even think about going through there. Not even close. Well, okay, here you go. That candlestick right there had 2,037 contracts traded in a high from 79 to 56. So in 23 or 22 and 0.75 contracts or prices, levels, they only traded 2,000 contracts. And what happened here? That first hit was pretty big. That was 11,000 contracts. 20 handles. Again. 3,600 contracts. This was every bot and fast trigger trader on the planet hit the short button all at once right there. Wow. Pretty amazing, huh? Now, the way these things look in real life is this. These are the trading signals. This has nothing to do with it. These levels just and the signals just accurately represent what goes on over here. What time is this? Let's see, this is 5:30 in. Okay, so these are the signals, and this is what it looks like in a normal day. You know, an A, a B, a trigger, etc. It doesn't look like everybody out the window, which is what happened over here. Everybody just jumped out the window on those tweets. Amazing, isn't it? The thing that I find amazing, or that I found amazing about him, and I haven't yet to find out any other information, this is solely based on a Truth Social tweet with no substantiating evidence or, corroborating documents, nothing, just a tweet. And to this moment, I don't know if it's been if that stuff has been verified or not. Pretty amazing, though, isn't it? Pretty darned amazing. So there you have it. Anyway, let's move on to something more fun. Let's bring up something that is also really important, and that is that the market, the futures market, is a zero-sum environment or a market. And what do I mean by that? Well, by the definition, first of all, I'm only talking about futures. The next important point is just stop and think for a minute. What do we talk about in futures all the time? So many contracts traded here, so many contracts traded there. This is the, the open interest. This is the market on close orders, etc. Contract being the key word. Futures are sold and traded in contracts. That means for every buyer, there must be a seller. For every seller, there must be a buyer. Period. Futures are a zero-sum game. No question about it. If somebody tells you the price went down because there was more sellers than buyers, you know right away that person has no idea what they're talking about in the futures market, or vice versa. The price goes down because aggressive sellers cross the inside market and hit the bid. Price goes up because aggressive buyers cross the inside market and lift the ask. Period. What does that mean to us as traders? Well, it means a lot. It means that the market goes up to go down and goes down to go up. And goes up to go down and goes down to go up. And goes down to go wonder where. Why does that happen? Real simple. Perhaps easier looked at on a candlestick chart, like I thought I was showing you a minute ago. The market goes up to go down, down to go up to go down. Why does that happen? Because for each, let's just, today is probably a piss poor day to look at it, but okay. Let's try to do this. Maybe it's easier to visualize here. Come on. Boy, IRT struggles with memory anymore. Like me, I guess. So here was yesterday's RTH session. Down, go up. Up to go down. Now this is a little bit, this is pretty extreme and pretty dramatic, but you can see what's happened over here. And why does that happen? Well, seller, 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 sellers. Who's on the, someone is on the other side of every one of those trades buying. They get down here. Who is, in this particular day, who has a tremendous amount of long inventory? These guys down here that were buying from all of these sellers all the way down. How will that group of people make money? The market goes up to go down and goes down to go up. It's my opinion that the majority of the counter traders, the people that are trading counter to retail and everybody else, are the higher time frame. And my feeling is that because, okay, you start selling to these people here, how much money do you have? Do you have enough money to hold even one contract long all the way to here? Not a lot of people do. And I realize that somebody was short from down here, so they're buying long to cover their short, whatever. Okay. I understand that there are mixed groups in these things, but let's look at it at the real base level. There, for every buyer, there's a seller, meaning for everybody that sells, there's a buyer for some reason. So somebody is buying all the way down here and is long. And how they can make profit, they can start taking the market up and triggering all these stops. Because every one of these guys on the way down is putting a pile of stops here, and a pile of stops here, and a pile of stops here, and here. That's the nature of a zero-sum game and the nature of the futures market. Different from any other. In every other market, there's a pool of liquidity, a bunch of shares of stock that you can trade, that you can buy. If you want to sell short, you have to borrow those shares or own them already. And there are market makers who take the other side of every trade to provide liquidity, but they make their money essentially on the spread. So, take that on board for a minute. And think about it, that's a good weekend thing to ponder. And first of all, thanks for stopping by. Smack a thumbs up, subscribe, drop something in the chat. And if you think what I'm saying is wrong, put something in the chat. Let's have a discussion about it. I'm more than happy to be proven wrong and learn something new. This is what I believe right now. So there you go. And there you have it. There you have it. And boy, oh boy, am I glad I was being a very disciplined boy. You can go back to the stream, monitor, review the stream, and see what I was narrating right here. We had just taken the IB statistic, and we had not gotten any further signals, and we were not any point that would have justified a IB trade, either one. And of course, you know that there are four trades, or two trades associated with the initial balances, and there's two for the IB high and two for the IB low. It's real simple. There's an IB continuation trade. Price trades up, takes the IB, pulls back, and keeps going. The IB failure trade, which is a mean reversion, comes back up here, can't get anywhere, and comes back into the middle. And there are those same 2 trades for the IB low. I am vetting those trades, and that's all I'm taking. Yesterday, I took this trade right here. There's A, there's B, there was a trigger. I went short. Boom. That's what you do. It stopped out. That's perfectly understandable. That's 50-50. I have no control over that. It is a random market. The outcome of the next trade, hold on, I'm trying to get there quickly. The outcome of the very next trade is 50-50. It's a coin flip over here. And one of the most important statistical facts that you hear almost every day, but pay no attention to, most people, past performance is not indicative of future results. What the outcome of the next trade is 50-50, and it has absolutely nothing to do with what came before it. Statistically. In fact, there is a widely utilized by the gambling industry. There's a widely utilized phenomenon. It's a widely used phenomenon by the gaming industry from the point of view of a casino, and it's called the gambler's fallacy. Particularly prevalent in roulette, maybe other games. I'm not familiar with gambling because I don't gamble, and it goes something like this. Oh man, we've had 10 blacks in a row. The probability of another black has got to be next to 0. I'm going all in on red. The gambler's fallacy. The outcome of the next spin is 50-50. And in fact, in roulette now, it's less than 50-50 because they added a 0, a green 0 in Europe, and in America they added a green 0 and a double green 0, if I'm not mistaken, lowering the probability that the outcome will be 50-50 for the gambler, lowering the probability for the gambler by less than a 50-50, increasing the odds to the house. That's the gambler's fallacy. Look it up. Google it. AI, and I got to stop saying Google. I got to say AI now. Be equal opportunity supporter of all things AI. I don't like AI. I think it's ruined Google and it's ruined our searches. You search for something on Google now, you get a whole bunch of AI bullshit and a bunch of ads. You don't get the results, and then over in the column to the right, like you used to get, there were sponsored ads. That's fine. I want to know what the search results is for all the web pages out there. I don't want to know what and the biggest problem with AI now, never mind. This is a truism I should keep to myself again. It's a fact, but it's not. It's a pretty scary deal. So anyway, there you have it. And if you notice, I have pushed to my book map the pullback levels and the continuation levels from the backtest chart, so I can keep an eye on everything in the middle of the day. Oh, what I started to show you. Yeah, I did show you that. Took the stop. Okay. Yeah. From last week or yesterday. And if you're not familiar, while we're doing all this stuff, if you're not familiar with Bookmap, here's how Bookmap presents a trade. There's the entry. This green line is a break-even line. If had price come down to my first target, the break-even line would have gone up to the risk-neutral scale, because that's how I have the package set up. This is the stop, and this is T2. And you see it fluffed around, didn't get to my break-even T1 target. I did not get risk neutral, and I took a stop for 24 ticks because it's 2 contracts at 12 ticks. And here's the outcome. Entry, exit, price, MFE, MAE, and the bottom line. That's how it works. But absolutely transparent. You can't possibly miss it, right? And it's really a pleasure. It's an expensive platform. I wish there was something that worked as well or better, but it's got a lot of features. It's pretty hard to beat, really. I'll have to say that. Something else I think I'll do, maybe. I want to see something over here. This is just a test chart where I do test blah, blah, blah. I want to see what the book says. I want to make sure that I'm getting level 2 over here. Yeah, okay. I got full level 2 and I've got full access. So the reason for all of this and for these buttons up here and stuff, I want to have multiple ways to get into and out of situations. Say Bookmap goes, tits up for some reason. I want to be able to do different things. Now, in a sense, I'm screwed because all of this data, IRT and Bookmap, are all being pushed to me from Rhythmic. I can also trade or do things on Rhythmic, close out or whatever I need to do. But if Rhythmic goes down, then, Katie bar the door. Another very, very valid reason, as today was right here, for using a full bracket, stops and targets. And they're all incidentally on via Rhythmic, via Bookmap to Rhythmic. They're all server side. So if the whole world comes to an end at your house and your internet goes up in smoke and you've got an order on, your stops and targets are in place over there at the co-located machine in near Chicago. A comforting thought. So there we go. We're going to come up to the top of the world famous power hour pretty quick. Of course, I'm not going to be doing anything. God darn irritating. I'll tell you, I really wanted to put a trade on today. And I took the stop yesterday. Would have been nice to have my profit target. I guess I could go through the back testing while we're just kind of killing time here. The way this works is, I think I've pretty well explained the chart, that it's for my visual reference, et cetera, et cetera, et cetera. This is the actual initial balance trading system. Now, notice that on Bookmap, and I suppose other programs, using the multi-brackets, I put in a stop and a couple of targets, and it's smart enough to know if I've gone long or short. With a backtesting system, you've got to code up exactly what you want this thing to do. And if it's long or short, you got to put in the rules for both. End of day, the whole shooting match. Because this is absolutely non-discretionary. It will go through and actively evaluate and act on each and every rule. Every minute candle. In the case of, because I have it set up on the minute bars. The way the backtest works is pretty cool. For example, well, I can backtest 500 days and it takes 5 seconds. Let's do 20 days. Oh, come on, man. There we go. It's going to be on the ES. It's going to be 2 contracts. It's going to be on the RTH session. I want these reports. Each round trip is 2 shares. Okay, that's right. Okay, and I want to backtest this. Are you ready? Hold your breath. Don't blink, you miss it. It took 1 second. It took 1 second to go through each 1 minute bar for the past 20 trading days, evaluating each and every rule accurately. We took 30 trades. We got 14 long. We got 16 short. That was the net profit. What's going on over here now? I think there's something there, yeah. And then we have this one, which is important. This is the max. Come on. Well, IRT just hates this stuff. I don't know what to think about memory. I've got 64 gigs of DDR5 RAM in this thing. And my GPU has 12 gigs onboard RAM. And it stumbles and farts around like that. You see that dragging and hicking up over there? Oh, sorry, wrong screen. So these are the rules. This is how you set up the back test. This is the back test, and it took 1 second. It took 1 second to trade 20 days, 1 minute candles. 30 trades, 14, 16, long short. Sorry, I had it on the wrong screen. This is an error because it says $1,050 largest winning trade should not be any larger than $750. The losing trades are spot on accurate because that is how much 2 contracts cost you in dollars if you take a full stop. That's 24 ticks on a 1 lot or 12 ticks on a 2 lot right there. So that's correct. This is because of a hiccup on the end of day thing. I don't know which day. There's 2 days where this happens. Oh, let me also point out. There's a 43% win rate, and there's a 2.41% or to 1 profit to risk, or R value. This 43% is, let me show you how that works and why I have a little question about the accuracy of that, or which to believe. 43% is 13 winning trades divided by 30. Which is the total number of trades, right? There's 43%. However, here's the 2 things need to happen that IRT does not do. The difference between 13 and 5 is 18 trades, and there were 30 total trades. So 30 minus 18, 12 trades are scratch. So I believe I can look at this in 2 ways. I can either say that I can add 12 more to this one, which would be 25, and 12 more over here, which would be 17, because a scratch has 1 winner and 1 loser. That's how it's a scratch. Or I think it's simpler to do this. There is a total of 13 winning trades and 5 losing trades, which is 18 trades. So there's 13 winners divided by 18 total trades that are not scratched. That's 72% win rate with a 2.41% average winning ratio. Now, the way you would figure out the expectancy accurately is to take the win rate, which is 74% or whatever I said. The calculation for expectancy is win rate times average winner minus loss rate times average loser. And of course, you'd have brackets and do each one of them separately. I mean, I'm not trying to write a formula here, but you get the point. This gives you the expectancy. Now, I haven't calculated the average winner. I mean, the system calculates the average winner and the average loser. And the average win rate we just calculated was 74%. And the average loser is, whatever that is, that's 5 divided by 18. Let's do this, kind of fun. Let's do this, huh? What do you think? Come on, goddammit. So we got 5 divided by 18. So we have a 2.7, or let's call it 28% loss rate. So win rate, 74%. Whoop. 0.74 times average winning trade, 723. Is $535. Okay. Loss rate is 27. Whoop. Times average losing trade is 300. Oh, I don't want to be 36, do I? That's 81. So we have 531 minus 81, if I'm not mistaken. We have 535 minus 81. We should expect to make, our expectancy is $454, and I hate using dollars. I apologize. Let's go divided by 12.5. Boop. It's 36.32 ticks per trade over a sample size of 20 days and 30 trades. That's too small to be statistically significant because it's within random occurrence. And I'll show you that one right here. Look at this. We had 7 max winners consecutive, and we had 2 consecutive losers. These are the random distributions, right, of winners and losers. That's how you go about figuring the statistics, your statistics, and you should do that over a large enough sample size that it is statistically significant. And let's do that. Let's not do the calculation because I'm not in the mood. But watch this. This is 500 days, huh? 500 trading days. That goes back to 2023 somewhere or another. You ready? Get your stopwatch out. Five seconds to backtest every rule, every minute for 493 days, taking 705 trades, 369 long, 336 short. Ooh. That's how you can do your statistics and vet trades in a reasonable fashion. Let me tell you another cool thing you can do. And now there's a couple of things here that I already know. This is incorrect. This should be 750. This number is the 1st of May, 2024. It puts the trade on short. It's an IB failure. It puts the trade on. It goes to T1. Trade goes right through T2 and on to the end of day. And I have no clue why T2 doesn't fire. It's everywhere else on virtually every other trade. That's an anomaly I don't know about. And here's our stop again, which is the real important one for me because That's where you get drawdown. Now let's look over here. The max consecutive winners in a row are 9. The max consecutive losers are 8. So you would have to sit here in your trading system. If you've taken 7 losers in a row on this setup, you would say, no, that's within my parameters. Looking back over 500 days and 700 trades. Not to worry. That is expected. That is recognized to be expected. Now, here's something else you need to consider. Okay. 8 losing trades in a row is 8 times 300. That's $2,400. That would that blow up your account? Would that blow up your trading thing, whatever it is? You know, that's where you have to determine your own risk parameters for the setup. And the average win ratio went down to 2.22, but we need to do the same exercise over here because you see we only have 466 winners and losers, but we have 705 trades. So $439 scratches. That's a lot of scratches. That's double the amount of winners and or losers individually. Now, if you want to do the correct, what I believe is the correct win rate, you would go 750 divided by 466. Did I do that right? So you have a 53%, 54% win rate instead of a 35. I'm not sure. I don't really know if I'm thinking about that accurately. If you have a better idea, point that out to me. But that's how I would do that. And then you could figure out your expectancy going forward. Yeah. That's backtesting. And one thing I was going to mention that is pretty cool about this, which I have yet to do, but we'll do this now that I've got all this other stuff working. You set up your backtest, like we just mentioned, and you look at a review period. So in other words, I'm going to go from the beginning to the end of 2024. And I'm going to backtest that. And then I'm going to optimize by setting up various parameters, and the computer will optimize the strategy. Once I have an optimized strategy for the IB trades over the data set from, and this data set goes back like 2021, I think, until January 31st of 2024, I can then use the optimized data and backtest over the untested data, which would be from January 1st to present, and see if the optimized data applies in the current market condition. That's a correct forward test. Pretty cool. And I'm sure you can do all of this in Python or somewhere else if you're a whiz bang, but I didn't have very, I mean, I got to where I had the risk neutral package and all the data pulling out from our IRT and plotting and doing all this stuff. And two things happened. I struggled with the getting the entry rules written out right. It's before I had come up with a sequential rule system like this. So this is about a year ago. And B, I couldn't make sense of the numbers. They didn't seem right to me. So I reached out to the guy that wrote the program, that I was using, which is called backtest.py. And he said it doesn't work with futures. It was built for crypto and FX, so it trades in pennies or cents. It doesn't know how to handle points and ticks and the value of points and ticks. So I thought, well, okay, thanks. There is one backtesting software system that you can subscribe to, and you have to write the backtest code yourself in Python. It's called Quant Connect. But I never got past finding out the name and listening to some videos. So I came back here, and this is what I'm going to do. I'm too old to go down. I'm prone to go down rabbit holes, so that's not something that's a good thing to do. And we are now zooming along into the world famous, or shall I say, dare I say, infamous Power Hour. I'm so curious to see the news in the next few days as to whether any of this nonsense in the tweets that caused this episode were based on fact. What I've seen so far was that there was concern about China's position on rare earth minerals. Well, Jesus Christopher Christ, that's a pretty big deal for rare earth minerals, I would think. You know, that's a pretty big reaction to only that sector. And Trump's tweets were talking about China sent letters to all the nations, about this and that and something else, and there was a big uproar, and he was reacting this way, and I haven't found any. Let's see it. Like I said, I'm not political, but boy, I'm telling you, I am sure glad that I'm switched on about risk and about unrecognized, potentially critical risk. Here you go, 10 o'clock. 10 o'clock, straight up on the drop. Chinese letters were especially inappropriate. Have contacted by other countries extremely angry at China. Sinister move with rare earth controls. I'm going to not bother talking to now there's a good idea. I've got all this crap, but I'm not going to talk to the head of China and ask him what the hell's going on. I think that's so strange. And then I'm going to propose countermeasures. But there is not one word about any of this anywhere else that I can find. So I don't know. I really don't know. It's the fact that we're having 130-point market moves in policy conducted on a private social media tweet blows my mind, frankly. Anyway, so I don't know. Let's hope that. I don't know what to hope, to be frank with you. I don't know whether to say I hope that there was a reason for it. What I believe is the case, as I mentioned earlier, last week, day before yesterday, some people in the know on Tasty Trade, actually, Sosnoff and Tony Batiste and somebody else were talking about what we need in this toppy market is some sort of catalyst that would cause a sell-off And they thought it was would be really phenomenal, but very unlikely if we could get a sell-off down to 66 range. Today we're at 66.35. And that would present a tremendous opportunity. That would give traders an opportunity to adjust their inventory and a great opportunity to take on positions. Isn't it coincidence that 2 days later we have an unsubstantiated tweet that causes a sell-off to 66.35? I mean, I find the coincidence there to be staggering. And you can go listen to that anytime you want to. And if you think I'm making it up. Anyway, there we go. So I didn't get clobbered. I hope you did not also. I hope you made a lot of money. I didn't jump in it just to hell with it. I'm not going to worry about the trades I'm betting and just get on a short and try to take a bunch of money out of it, which probably would have been the thing to do. But I don't react that way. When I'm geared up and plugged in and set to do something, that's what I do. So there you have it. We'll have the bottom of the hour. I'll do the recap, and we'll shut this stream down at 1500 like normal. They're going to sell it off into the frickin' close. Look at this stuff. Wow. They're going to get her clear down to the 66 handle for too long. My. My goodness, look at that. You know, and it becomes so deceptive, you know. This is 30 points. Ha! These are 5-point handles, right? This is a 30-point move. There. Wow. Wow, wow, wow. That's a lot. Holy smokes. That's pretty amazing. Let's see something out of curiosity here, since we're doing nothing, or I'm doing nothing, except watching and talking, which is probably the right thing to be doing. Come on. Well, okay, just to give you some indication of what the hell's going on. Where am I? Okay, here we go. This is, we're gonna put tariffs on penguins, you know, here. This day. Here, okay, 90-day pause. We're not going to do that now. We're going to wait for 90 days. Okay? Here's today's move in relationship to these. About the same as here. Well, we can be exact. Watch the info box. This is the date. Close, change, open, high, low, close, and volume. Here we are so far. 1.42 million volumes so far. 148.5 range is what we are trading. You see that up there? 148.25. So let's look at some of these. Here's the big, oh my God, well, holy shit. 324.25 ticks. Can that be right? Holy shit, 500 points. Ticks. Oh no, that's points. This is in points, I'm pretty sure. Well, let's do the math, eh? The high of 423 and the low of 5183. So yeah, 320 points. Now, you need to also remember that, well, this is adjusted contract, but it doesn't matter. For some reason, I find that strange. I guess the point I was trying to make is the market goes up to go down and goes down to go up, and then it'll go up and go down again. That old story. But this day looks pretty, end of the world-ish. But look what happened over here in April. Never mind these big gaps. But it's pretty weird. 5091. Oh, wait a minute. Let's look at the high. 5629. Low is 5089. So yeah, 500 points. I guess it's perspective, but this says it's 324 points. Now, granted, there's a little wick up there and there's a wick at the bottom. But doesn't this is only 148. I find that strange. I don't know if it's just me or my eyes are weird or what, but. And as far as my data goes, this might be of some interest. This black volume profile over here on my micro composite chart is the volume profile and all its related levels for all of the data that I pulled into this chart. And that data goes back to the 12th of September, 2021. I find that pretty weird. Huh. I find that really strange, to be honest with you. Nothing I'm going to do about it, but, but except find it strange. I have to think about it, and I'm not going to do that now. Got to hit the ground running at 3. Get over to the Apple store and pick up our three new phones. Oh, excitement! Excitement reigns supreme. The girls teamed up on me yesterday. We got 3 new iPhone 17s, 3 of them. But I mean, the phone I'm using is like 7 years old or some crap, so I guess it's okay. And we're switching those from Verizon to AT&T because I have in my office here and all my fiber optic and everything is AT&T and has been for a long time. And we discovered that if we switch our cell phones to there, big discount. So it costs us we save $150 a month or something. And at this point in time, every little bit helps, eh? So what I'm going to do now is jump through the shower, which should be able to get out of the way before the bottom of the hour. I'll do the recap. We'll be ready for the market on close. And then I'll be shutting the stream down at 1500 like normal. Hope you had a good day. I hope you didn't get killed. I hope you, on the other side, I hope you jumped on there and just rode that thing till it was raw. Kind of hesitant to walk away here. They keep hammering this thing to the bottom. Sorry, I had that on the wrong window. They won't quit, baby. They're going to take it to 6,600. Sure as the world. And we're smacking out naked volume points of control right, left, and center over here. That's a pretty amazing. I have no. Yeah, well, we've rounded the curve, so let's get into the wrap up here. So yeah, what a hell of a day, huh? What can I say? There's the full session. Here's where I was going to do business, and then Tweets or Us got a hold of things, and down we go. Look at that. Now, be careful to understand the scope. This was 6,800 right here today. This is 6,600 down here. That's nearly a 200-point move, a 2.47% move in the ES so far. Right there. Volume's off the map, of course. $176 volume for this time of day. Average 2 range has come down. We were up as high as 30, 29 and change. Boy, this thing hates that. Now we're down to 9.5. Think about it. This is the average 2 range in 5 minutes. What is your stop? What is this going to do to your stop and your risk? Important considerations. As far as the backtesting story, I've talked about that a lot here, but so far, it doesn't want to work. It's having a hard time thinking. Here's 9:30. It's when these lines start to plot. There's our A signal, and there's what happened. No possibility for me to get involved with that, or would I want to? Shorts or not. Taking a quick poke through the news. As I said, what happened there? This is not working right. As I said, I was looking for the Fed meeting, but I don't. We'll have to look. There's the Michigan numbers. These are insignificant. This has nothing to do with anything, of course. The entire move was based on Agent Orange, as Richard calls it. These tweets. There you go. 10 o'clock. 10 o'clock. So there you are. Nothing else is much important at this point, other than don't be in a position if you're, they're going to take it down to 6,600 or lower for sure today. Absolutely. 200 handles. Wow. Yeah. So Monday, this is Financial Juice. It's free, of course. we're going to get the market on close orders imbalance over here. Who cares? Pretty quick. You can filter for your time zone and reports you're interested in. This is investing.com, which is my old standby. I like it because it has a nice, clean presentation. If you're going to do a snap and put it in the chat room or whatever, you can filter, of course, for your time zone and country reports you want. 3 stars, 2 stars, 1 star, blah, 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 on and on and on. Also earnings. And here's a little tidbit. Earnings season starts next week. And at some point in this coming month is a Fed meeting and a potential rate decision. One thing you can do with this one is you can easily jump out to next week and see what all the reports would be for next week. I guess they've completely given up on the non-farm payroll. Well, they keep kicking it out. They had it kicked out till today as far as the investing.com for their schedule, right? They keep kicking it out. They kicked it out till today, then they took it off last night and didn't start early, and now they're hoping for next week. This is all subject to these children acting like grown-ups in D.C. That's all there's to it. So that's the reporting. That's the news. We've looked around the horn here about as much as we can. Damn thing is having a problem. It has a problem when it's processing so much data. No question about it. And I'm on a 2 gig for something, 5 gig or something, fiber optic direct. So it ought to be okay. Market, here's our micro composite, which is a RTH session only, daily bars. Draw the volume profile around wherever the bars overlap. And that gives us a overnight or a micro composite VPOC and also naked volume points of control, etc. Not much to say, it's just been you can go back and listen to the stream. I was, expecting my signals to start unfolding I was looking forward to an IB trade. And here's what we got. Nothing for me to do here. Sure, I could have broken my strategy and my plan and just said, screw this, and jumped on some shorts somewhere. Here, pullback, for example. And that would be 150 points to here. But I didn't. And I tend to not do that because I try to be continually conscious and aware of my emotional status, my monkey mind. I'm not listening to that. I know that it'll never go away and I'll never eliminate it, but I always have to be aware that those things are baked into my my monkey mind wiring, FOMO, fear, wanting to be right, revenge, all that stuff. And so I have to be very aware of that and not consciously not action it. Do I want to take a shot? Yeah, but in my opinion, that's chasing. In hindsight, it's clear as a frickin' bell, always. That's why the rearview mirror traders and the internet schmucks, the internet gurus are so deceptive. They're good enough talkers to make going back over this look real logical. I can do the same thing. My daughter can do the same thing. I want you to tell me what's the market going to do right there? This is the hard right edge. What's the market going to do? Do we find a bottom here? Is the news going to change? Are we going to go back up? Or not? You know, that's the difference. Everybody can look in the rearview mirror and be a genius. So there you go. The stream, welcome to, and, you know, smack a thumbs up and a subscribe on the way out the door. That'd be super. Put something in the chat. Richard and I get lonesome. I'm not monetizing anyway, so subs and you know, likes are great. Much appreciated. The stream starts every trading day morning at 8 o'clock. I do the pre-market, the setups, all of those things, and then we trade the entire day until 1500 at the cash close, which is another 15 minutes, 14 minutes. And that, you know, it's my virtual trading journal. I stream it to YouTube so that it adds another layer of transparency and accountability, A. B, I can review the stream on any device. And, you know, these are stand-up desks that I have, no chairs in here. And I'm standing here from 6 in the morning till, you know, usually around 2100, maybe 2200 at night. So it's nice to be able to review the stream bits that I want on something else, rather than standing here. And that brings me to another point. The streams are 7 hours long. So that's why the timestamps and the chapters are so important to me. I mean, I'm sure as hell not going to listen to 7 hours of this every day. And I wouldn't imagine anybody else is going to review it either. But that's why I try to be real accurate with the timestamps and all those chapters, so that, you know, like yesterday, day before yesterday, I wanted to know why I missed a signal. Why had a signal not fired? I went back to the stream to that specific point, and it did fire. I misread it with my old eyes. So I increased this font size so that wouldn't happen again. You know, that kind of thing. And it's real valuable. It is a journal, and it's valuable for that. So 2.5 minutes for the market on close imbalance. What does that mean? As I said yesterday, I'm not entirely sure how to interpret that. We had huge market. I didn't copy it. Damn. 3 billion something million S&P 500 contracts buy side yesterday. And then there's the S&P 500, there's the NASDAQ 100, there's the Dow, and then there's the Mag 7. Every day, market on close. Actually, I don't know if I can find it quickly or not. Right there. Here's the market on open imbalance. It's the exact same format, only it is market on close. And you would read this 258 million, 45 million. Yesterday it was 3 billion, something, 100 million buy side S&P 500. Yeah. Actually, that's something curious I never thought about. I bet you I can scroll back and see. Maybe. See the 9th in there? Yeah. Oh, there they are. There you go. Market on close imbalance yesterday. 3,206,000,000 buy side S&P 500. 1,988,000,000 NASDAQ, and on. Well, that's interesting. I never even thought about that. I guess it just goes on for I don't know how long. That's pretty cool. Well, they took it down to within a spitting distance of 6,600 from 68. So they got within 200, pretty damn close to 200 points. And they're not done yet. Oh, wait, there we did have our market. There we go. There's our market on close and balance. Now, you see, yesterday was 3,200 and something million. Now it's a sell side 970 million. Go figure it out. And so on and so on and so on. You know, it's just blah, blah, blah. At this point in the day, you know what happened. I know what happened. It's Friday. I got things. I got to get the girls off to the Apple store and collect our gear and do all of that. Get all the data and all the crap transferred from one to the other. Once again, thanks a lot for stopping by. I appreciate the feedback for sure. Have a great weekend. Remember that you are the most expensive equipment and valuable equipment you have in your trading office is on your side of the monitor. Your eyes, your mind are what interpret all of this stuff and make these trade decisions. You need to take care of that as well as you take care of, or better than you take care of, your internet connection, all your fancy monitors, your blah, 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 keyboard, desk, all that stuff, you know. Be hydrated, be well rested, exercise. If you're on tilt emotionally, don't trade. You know, you go out, get hammered tonight or, you know, last night and come home and get in a fight with your significant other because you're too drunk to walk. Don't get up and trade. What can I tell you? You got compounding issues at that point. Was the rollover gap 606? I don't know, Richard, what exactly the rollover was. You mean the difference between where we closed the previous contract to where the adjustment was for this continuous? Is that what you're asking? I think so. I'm not really sure. I can look back at what the gap adjustment was, and I guess I could go back to look at the day as to what the close was, and then I don't know, because I only have the adjusted contract here, but I do have the adjustment amount in for use over here, for example. But it was pretty. No, let me see here. It was not 100 points. No, definitely not. But I don't remember what their opening was that next day on this Z contract. I could Google it, or I could check it out on CNBC or CNBC. Jesus, what a joke. CME. Let's see something here. I can find it faster this way, I think. Boom. Boom. Where did Garrett go? So here was the rollover on the ES was 56.75. And here was the settlement price. Yeah, it would have been pretty close because it's 65.88 quarter plus 56.75. Can you see this? Why on the right screen? No, God damn it. Sorry about that. Oops. Right here. There's the settlement price on the U contract. And there's the rollover amount to Z, which is 56.75. So pretty damn close. 55.88 plus 56.75. 88 and 56 is about $1.30, right? So it would have been about 66.30-ish. If you're seeing that, Richard. So there you go. And there you have it. Okay, boys and girls, 5 minutes till that ringy-dingy. I got nothing else to say other than I hope to Christ you were short. Whoever you are, wherever you are, I'm sort of sorry that I didn't just throw a short on and figure, well, this is a unique one-off kind of an experience or situation and forget the rules and just do it. But yeah, you bet. But I didn't, you know, woulda, coulda, shoulda. Yeah. And I am going to be once again, if the session prices would be helpful to you, drop it, like, subscribe, drop something in the chat, and I will hook you up with them. I provide them to a lot of people free for a long time. I start pushing them with my systems. IRT pushes them out automatically at this point, starting at 1700 Sunday night, 24/7 or 24 hours through till about an hour from now, about 1600 when the market closes on Friday afternoon. Both the ES and the MES. Two minutes and a half. Do something crazy in my honor out there, everybody. Have some fun, get some exercise, rest your body, your eyes. Look back at this chart and laugh. Hopefully you're in a position to do that. Look at this frickin' candle. We've just now taken out the entire group of this MC. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days back. This is This is September 2nd. So if we continue to take them, we'd get down for 2 months here. As it stands now, September 25th is where was this first doji. We had the gap down, and I do this real, like everything else, real simply, real basic. Wherever price overlaps, I continue to draw the volume profile around them. Where there's a gap and price doesn't overlap, I start a new one. Boop. Case closed. There you have it. There you have that. And we're going to do this in about 15 seconds. And I'm not going to be able to monkey around here too much longer because I've got to get going with the gals. It's Friday afternoon traffic. That's always magic. Yeah. Well, look at that. Look at that volume loading up at 95. Ooh, baby. What a hell of a day. What a hell of a day. And last but not least, we've got the VPOC migration. Oh boy, oh boy. Well, that's definitely puts the cap on it, doesn't it? I would love to be able to know, be at a level, a professional level at trading. I mean, you know as well as I do, there was a reason this happened to this level. Could it? And the really funny part to me is that those guys were talking about it 2 or 3 days ago. Well, if some, what kind of precipitant would it take to jar the market loose and we get a substantial, kind of a April tariffs pullback thing and reset some inventory down, down as low as maybe even 6,600. That's always amazes me. Always. And that, boys and girls, is the world famous end of this day, this week. A lot of people's hopes and dreams. I hope nobody within earshot here got hammered. I hope you just got on one and rode it till the cows came home. Stop and think about that. Well, 68 to 66, 200 points. 10 grand on a one lot, right? I think, isn't it? Every point's $50. $200 times 50 is 10 grand. Last time I looked. Wow. I got a whole bunch of naked volume points of control to take off the deal, don't I? Look at all this stuff. And previous MCVPOCs all taken out. My. Aren't they proud of them little selves? Now, what these guys were talking about was is that the point to reload? So that's a question you need to ask yourself from an investing point of view, not trading necessarily. All right, have a great weekend. Richard, have a great one yourself. And thanks for stopping by, everyone. Smack the thumbs up and the subscribe and, all those kind of things. Go out and do something healthy for yourself. I've talked about that ad nauseum. And I'm done, and I'll be back online.